Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, August 22nd, and we are live day 2 from Miami. Thank you, everybody, for being here. And as soon as we join, of course, the guy sitting right next to me. Thanks, bro. Appreciate it for the 50 gifted memberships. 50 of you guys got a gifted membership from Mr. Jarek Wall. There he is. He got his good morning message in the chat. Folks, today is the day where we see if we can actually hold on to some games we had in 2025, because Powell will be speaking in the next hour and a half, and this is going to be an important one. This is going to be a big one. We got a lot of updates, a lot of stuff to talk about in regards to what's going on with Powell. I'm going to be honest, I'm not that excited for him to speak because I think he's not going to say things that we want to hear. But nonetheless, the market obviously is going to have to interpret what he says. And based on their interpretation, that is going to lead to the inevitable understanding of where rates are going. I think by today, we are going to have an understanding of where the probabilities are for rate cuts. Right now, we're at 71.5% on the September probabilities. It is the lowest in basically, call it 2 weeks. It was 100% last week. And so obviously the market's pricing in that this is going to be a little bit of a choppy day. It will be at 10 a.m. live. So it'll happen in about an hour and 15 minutes. And I will be here streaming it. And then Trump apparently is speaking at 12 p.m. Eastern. So an hour or maybe even 30 minutes right after Powell gets finished speaking. And then Pulte, the director of the FHA, he's going to be putting out a statement at 9:30. So you just got a lot of stuff going on today. And I think it's going to be very choppy. This entire week has been rather choppy. S&P has been kind of flat, but I think everyone's concerned about what Powell's going to say. And so we're going to find out in the next coming hour, and then we'll keep going from there. Again, Mr. Jarek Wall, thank you for the gifted 50. It has been a fun 2 days in Miami. Last night, basically throughout the entire day, I got to see how Derek lives as a startup founder and an entrepreneur. And so I did have dinner or lunch with Triple V. So whose name is Vlad. You guys guessed it. His name is Vlad. You guys have known it for a while, but it was funny because at dinner we were like, Vlad, they know who you are. He was like, I don't give a shit. I don't care. He never cared about it. But this Triple V thing became such a meme on the channel, which is why it was so fun. But I had lunch with him and Derek. Again, both really amazing business partners and just really successful people. So just fun to kind of get some insights into how they think about life, their life philosophies and investing philosophies, all that stuff. So that was fun. Got to go out last night with Adam Bergman. You guys know Adam. He does Theta Thursdays with us. He's actually in Miami for the meetup. So got to get some dinner with him and Derek last night. And overall, it's been fun. And then this morning, I woke up to this, which is really making me reconsider the East Coast, because how can you not? I mean, it's just beautiful. It's absolutely beautiful. No, not Vlad from Hood. Vlad from Robinhood is not sending a $200 super chat every other day in the chat. But there is another person named Vlad who's one of Derek's best friends. We did not go on a yacht. We did not end up going on a yacht. But dude, we woke up to this and it's just like I don't even have the words to describe what that sunrise looks like. And it's just, I don't know if this is the decade I move into an area like this, but man, when you see this, it's just imagine waking up to that every day. So who knows, maybe in the future. But absolutely incredible. And so it's been a fun couple days. We got the meetup on Saturday. So very excited again for everyone who's joining. I had a lot of last minute DMs and messages and emails over the past 48 hours. And I think I got pretty much anyone who wanted a spot in. So I think we have literally, honestly, 10 spots left before it's completely maxed out. So if you're in Miami and you do want to go, hit me up on Twitter and I'll try to get you here, and it should be a fun time. So there you go. All right. Good morning, everybody. Let's get into it and let's see what we've got going on with Powell. I think we'll start off with a poll right here in the chat, and then we'll get into some of the headlines. We also have some meta Google headlines that kind of made people think twice about AI being dead last night, although the narrative of AI being dead is starting to get a lot more exposure just given certain headlines around CapEx. I think a lot of these headlines are being misinterpreted and people really want a bear case, but we'll go deeper into them and discuss it. All right, so does Powell go hawkish or dovish? That is the question for today. Does Powell go hawkish in the poll or dovish? Again, hawkish means he's likely not going to signal a cut. Dovish means he probably is going to signal a cut. My guess right now is hawkish. I don't want to be the bear here, but it does feel like, based on the Fed FOMC minutes that we talked about 2 days ago, and just based on the general understanding of what could happen if tariff inflation continues to be extreme, which Goolsbee, who's another Fed president, he didn't help yesterday when he said, hey, I think the rate of inflation from tariffs is actually not a one-time price increase. I mean, that's, you have a Fed president say that that's not going to help the argument for if we would get a rate cut or not. I think he goes hawkish. I don't know if the market reacts to it that badly, but I do think he goes hawkish. You got Palantir right here down about 0.28%. AMD is down 1.3%. Nvidia is down. We'll talk more about them because of the idea that their H20s are now going to be stopped in production for China in particular. And the reason for that is because we had two headlines over the past couple of weeks of China saying, we don't want the H20, we want something that's better. And also, we don't think that the energy that the H20 uses up in China is healthy for the environment. Now, I think obviously they're using the environment as a scapegoat to say we want the best version of Blackwell. Trump did hint 3 weeks ago that he's working with Jensen based on that 15% revenue split to get a cheaper version of Blackwell, even if it's not the best version that US companies have into China. So I think that actually could be a tailwind for Nvidia. The sell-off is kind of dumb in my opinion, because eventually they will get China revenue back. But that is why Nvidia is down 1.5% in the pre-markets right here. Okay, so what should we historically expect for Powell? I think that is the question kind of on everyone's mind. And so let's look at the past 5 years. 2020, you had a rally after Jackson Hole, and then a reversal. So you went bearish after going up. 2021, he was dovish. You were up 1% for the rest of the day. 2022, you had a sharp drop. That's when Powell infamously said, expect pain, because he was going to get ready to raise rates at the highest levels in 40 years. And then we went down 8% 5 days later. 2023, you had a small bounce. Then you went down 1.5%. And then 2024, you were flat. And then you went down 5% 5 days out, all on the S&P 500. I mean, dude, it's hard to make a prediction on this, but it kind of just feels like it's going to be flat. And then I don't think we have a 5% drawdown over the next couple of days, but could I see 1 or 2% down if the reality of the situation gets priced into the market that there's not going to be a rate cut? And then, yeah, I could definitely see us taking a little bit of a hit. Now, ironically, although individual stocks are red in the pre-market, you've got the S&P 500 that's doing okay. It's actually up 0.27%. So maybe it's a little bit of a rug pull, or maybe it's just low volume, but at least the market in the pre is saying, hey, we're not that scared of this rate cut or potential speech on a rate cut, and we think it'll be okay. Now, even though I think Powell's going to be hawkish, the problem is there's plenty of Fed presidents, along with Bullard, that came out last night and said interest rates are too high. So now you have Bullard, Bowman, and Waller that are saying, look, we might be too restrictive. And if there's a world in which the Fed decision is not split, but a little bit not as unanimous as it was in the past on if we should cut or raise or pause, then I think Powell maybe gives into the pressure of saying 25 bips is not going to end the world. And if he doesn't, then I am very curious to see what the heck happens when Mr. Trump decides that maybe Powell's not the right guy for the job. So the point is, if he doesn't cut or if he doesn't signal that he wants to cut, the scary part is, I think Trump, and I think this is not that crazy to think, will legitimately get his lawyers on the phone and say, all right, let's get rid of this guy. We don't have time till May to wait. And then that creates a level of uncertainty and instability in the broader narrative around central bank independence, which is also very scary. So there's a lot riding on this meeting. We're going to see how this ends up playing out. Maybe the most likely outcome is nothing happens and we end up flat. But in the next hour and a half, we should get a much better understanding. 64% of you say hawkish. 64% of you say hawkish, which I would agree. It probably could be hawkish, but we're going to see how this ends up playing out. Shosh, thank you for the $5 super chat. Good morning, 6 a.m. Amit hits different. Hope you guys have a good meetup. Yeah, Shosh was supposed to come to the meetup in Miami. Unfortunately, he got called for work in San Francisco, so he's not going to be able to be in Miami because work was more important than the meetup. I get it. Bit disrespectful, but I understand. So happy he's enjoying the meetup, or he's enjoying the market open from California time. Dude, the people that wake up in California to watch this, I know there's a lot of you. It's crazy, bro, because like I'm still on the East Coast. That's the fun thing about being in Miami. At least you're still on East Coast time, but West Coast time morning opens are just different, bro. You're up at like 4:30, just getting ready to do this. Amit, are you in a closet? I'm not in a closet. Let me know if the audio is okay. Let me move the mic a little bit closer to me. But no, this is Derek's house. This is his background. And the new streams from the new apartment will be starting September 1st. Sorry about that. But it will be exciting nonetheless to see how this plays out when it does happen. Sorry, I pressed the mute button by accident. All right, so that's what we have for Powell. And we're going to see how this ends up playing out. Now, the other big headlines outside of Powell are still pretty massive in regards to what's going on with AI. And I think this is also something that we have to talk about along, and then we'll get into some macro data. So first of all, the big deal last night was Meta and Google have inched a $10 billion deal. And this was really weird because Meta and Google, like you didn't expect them to kind of sign this big of a deal together, but nonetheless they did. So the information reported Meta signed a $10 billion deal over 6 years with Google for cloud services. And the idea was cloud networking, cloud computing, and obviously AI workloads seems to be ramping up for Meta. Instead of going with AWS or Azure, they went with Google. Not sure why they went with Google. There has to be some type of differentiating moat that Google was able to provide in terms of the data services, software services, cloud services, or maybe they just didn't want to work with Microsoft and Amazon for whatever particular reason. If this is true, which hasn't been confirmed by Meta yet, but I mean, for all intended purposes, it seems like it will be true, then that's 10 billion going into Google. Now, obviously 10 billion to Google is not like a ton of money, especially over 6 years. But the point is, the narrative over the past couple of really days, 48 hours, has been AI starting to slow down. I just think a lot of people are annoyed at this AI momentum. And so you have headlines that are being misconstrued, like the Meta is firing all their AI researchers, or Meta is not hiring as many. One of the heads of the Meta superintelligence team came out yesterday and said, these headlines are just not true. Like we are focusing and doubling down on superintelligence. So Alexander Wang right here, who joined as the head of superintelligence 2 weeks ago, he said, we are truly only investing more and more into Meta Superintelligence Labs as a company. Any reporting on the contrary of that is clearly mistaken. And then they just signed a $10 billion deal with Google. That $10 billion deal is not just for like backing up their Facebook data. That's obviously for AI workloads, which are very important. And then on top of that, not only that, Meta hired an Apple executive again last night, Frank Chu. Chu ran Apple's AI infrastructure model training, and he became at least the 6th Apple AI model employee to jump to Meta. So this idea that Meta is slowing down the spend is kind of ridiculous. And also, Meta eventually will slow down the spend, but that's the promise of AI. Like, you shouldn't have to have 10,000 employees to build an AI company. It should happen with, I mean, Cursor, one of the fastest growing AI startups, has less than 30. And they've gone from 0 to $500 million in revenue in the past 18 months. So I mean, it's hard to imagine that these headlines are the bear case on AI, even though that is what seems to be being propagated as the like bear AI case narrative. Now, the other big headline on Meta that was really interesting this morning, and then we'll get into some macro stuff, is a report by the Wall Street Journal, which is Elon and OpenAI are still in a lawsuit right now over arguing around terms of intellectual property, who has ownership, nonprofit to profit. Court filings revealed that Elon reached out to Meta CEO Zuckerberg earlier this year to join his bid for OpenAI. He wanted Zucks to help him put up $97.4 billion to buy out OpenAI, which is quite interesting, to say the least. Now, obviously, Zuck said no because he wants to compete with OpenAI and he's stealing all their employees. I also don't think they would have been able to actually buy them for $100 billion because, you know, Sam Altman and Satya Nadella would have fought back. But nonetheless, you can see that Elon is getting a bit annoyed at OpenAI's success. You can tell that just the way he's tweeting about Grok and trying to, you know, get people to realize Grok is the true AI company. But OpenAI is just getting users and users and users every day. And so it seems like they are in a prime dominant position. That is also very good for Nvidia, as Sam Altman tweeted 2 weeks ago that he wants to get 100x more GPUs than they have right now. But nonetheless, Elon did try to make an attempt with Zucks potentially to take them out. Meta right here is at 740, and then Tesla in the pre-markets is at 320. Tesla did introduce a Cybertruck upgrade on their price by about 15,000. So the highest model is now 115, but it comes with FSD and it comes with a couple other features. But that was a headline in North America for Cybertruck prices that came out this morning. By the way, I drove a Cybertruck again for the second time this morning to Starbucks and got some lemonade. So yeah, it was fun. It's a big car. It's like a lot to navigate, just like controlling it. But I love it, dude. I like the design. I know people think it's one of the ugliest cars ever. And objectively, the sales have not lived up to the expectations of it, but I still love that car. So that is one of my favorite cars. Okay, Palantir. Let's look at this headline real quick. So this was a headline last night. Palantir has won a sole source contract with NASA in regards to building out a disparate data ontologized ecosystem for the government agency. Now, they've worked with NASA many times in the past, but from what we got on the filing last night on sam.gov, in addition to its robust data fusion capabilities, Palantir provides built-in analytics and visualization tools that deliver actionable insights through a modern user-friendly interface. This effort represents a short-term capability pilot designed to validate the software's functionality and performance. So this is not a full deal, which is why I don't have any numbers on this deal. It's a pilot, but it's a sole sourced pilot, which simply means sole sourced is that there's no competition, right? They were the sole source for NASA to be able to procure this pilot, if not this deal one day, which hopefully the pilot turns into, which is good for Palantir. Now, does that mean that they should be worth $500, $600 billion? Obviously not. We got to see what the terms of the deal look like, and one deal doesn't make the difference. The problem is for all the people trying to short a company that got a sole sourced contract from NASA, you're using the valuation without looking at the quality of the revenue that they're getting. And when you have quality of revenue, quality of deals, quality of customers, and quality of partnerships that don't really have competition, you can say the valuation's aggressive, but shorting it and expecting to go to 40, this has kind of been my point for the past couple of weeks with this Citron research dude, it just seems unlikely, given these types of partnerships are going to be happening more and more and more as the U.S. government is growing over 50%. So yeah, this could be a precursor to Golden Dome, which obviously Rocket Lab, SpaceX, Anduril, Palantir, all of these guys could be involved in that. And that's a $25 billion spend by the U.S. government over the next, I think, like 15 years. And obviously that could be very bullish for Palantir as well. So from that perspective, I think that, the short on it just doesn't make that much sense. Was it Derek Cybertruck? Yes. Also, after the market opened yesterday, I drove his Tesla S Plaid. Dude, has anyone driven a Tesla Model S Plaid before? It has to be the fastest car in history. Like legitimately the fastest car in history. Like we went from 0 to 60, I think in like less than 2 seconds, 1.8 seconds. It was ridiculous, bro. Like it was like, it's like a feeling you get addicted to. It was just one of those feelings. The G-force around it was incredible. So I enjoy that more than the Cybertruck. The Cybertruck is cool, but like that speed is incredible. John says, I have a Tesla S Plaid. Yeah, I didn't even know what it was. I was like, what is this, a Model 3? Like, what is this? Like, I've never seen it in person. And then I drove it and I was like, this is just incredible. Yeah, we have a bunch of you guys that own one of these. Yeah, I mean, my Model Y does not compare to how fast that is. But and then the steering wheel was like a joystick, bro. It was like, it legit felt like a video game. So that was a pretty cool experience. So those are the headlines we have on Meta, Google, and again, with Powell, the Powell speech will be at 10 a.m. We got the market open in 26 minutes. We're going to see what Powell ends up saying. Again, 64% of you guys are hawkish. I would agree. But ultimately, in about an hour, we're going to see how this ends up playing out. All right, let's get into some macro. Let's see a lot of the macro things we have to talk about. Real quick, right before macro, let me just say what Goldman said. So Goldman said, we do not expect Powell to decisively signal a September cut, but the speech should make it clear to markets that he's likely to support one. And that's an important nuance that could create the pump. Because even if Powell doesn't say, yes, I'm going to cut, which he kind of basically did in August last year, if he speaks, this is why we're listening to like his syllables, like every little thing he says, in a way that makes it obvious that he's dovish. Last FOMC, he was obviously hawkish. Then I think markets rally. Goldman says, we suspect that the most FOMC participants who have expressed mixed feelings about cutting in September will be willing to support a cut if Powell pushes for one, but that he will think it be more reasonable to make that case for them closer to the meeting with more data in hand. The meeting is only 3 weeks away, so I don't know how much more data they're going to get in 3 weeks. Maybe we get some crazy CPI in September and then they don't cut. But as long as he's not as bearish or hawkish on the cut, then I think we'll be okay. Hawkish just means that you're unlikely to cut. You're a hawk, right? You're unlikely to be a dove, which is more bullish on the idea of loose policy, and hawkish is just more restrictive. So we have been very restrictive over the past 18 months and really over the past 2 years. We've loosened up a little bit last year. Question is if we can continue to loosen up a bit more this year. I'm not in my apartment. I'm in Miami. New apartment streams will be September 1st, but right now we are in Miami. Okay, cool. So that was what we had in terms of what Goldman said. Now let's look at some macro stats and then we'll get into it. So first of all, the NASDAQ 100, which is one of the most important investing indices for technology, said that, well, they didn't say this, but everyone could see, they traded for a 6th consecutive day red. This was the longest losing streak since October 2022. Since October 2022. And what's really important about this as well is that it was something that we haven't seen since the bear market of 2022. Obviously, we haven't had an S&P 500 1% red day in over 28 days until 2 days ago. So it was one of those things where it was like, okay, we are finally seeing some volatility creep up. The VIX is not going crazy, but the VIX is up a little bit. And the market's starting to price in a bit more pain. This is the first time I could say I feel a little nervous about the state of the markets right now, just because you do have all the bear arguments we talked about yesterday in terms of froth, and we'll look at a little bit more of those today. And you have Powell not being as decisive on the rate cut. Now, I don't think that means sell all your stocks. In my opinion, that means you get hedged with some covered calls. Maybe you can buy some puts. I don't think that means get out of the markets and hope for like a 50% drawdown. But it does mean, hey, the multiple that we're trading at, for that multiple to exceed the current all-time high multiple that we're at, we need a catalyst. And the catalyst right now is not necessarily J. Powell and the Fed. Now, here's another stat that I thought was interesting. Some people are saying, well, small caps are the play if you should rotate out of large caps. If you look at the Russell 2000, they trade at 23.6 times next 12 months earnings. The S&P trades at 22.4. It's not a massive difference between 23.6 versus 22.4, but it still is greater. And for those saying, hey, the small caps are like the most easy trade right here because they've been undervalued historically to the S&P. Yes, that's correct. But right now, they're more expensive than the S&P 500. And you're buying companies that have junk debt and really aren't profitable, versus companies like Nvidia, Amazon, Meta, Google that are inside of the S&P 500 or the NASDAQ that are very profitable, which quite frankly are not going to be affected that deeply by rate cuts. So I still think the S&P is the better buy over small caps, even though small caps seem to be the main reason why people are thinking a rotation could theoretically happen out of large caps. I just think it's hard to sleep well at night being with small caps that have that much debt. And remember, the small caps need they really need rate cuts for the debt to actually come down, or the interest payments to come down, whereas Google doesn't really have debt, so they don't need to worry about it. So that is one stat on small caps that I think is important to take a look at. Now, here's another stat. We talked about this 2 weeks ago. We have a new all-time high on something that is a bit scary, but nonetheless, it is what it is. Leverage and margin debt. Margin debt surges to 1.02 trillion in July after surpassing 1 trillion for the first time in June. And the reason this is scary is because people are levered up. Margin is when you get money from your brokerage against your assets, and you use that money to then buy more stocks. If those stocks go up, you get even more money. So this is kind of how the rich stay rich, right? They never sell their Nvidia, they borrow against their Nvidia. And as Nvidia keeps going higher, they have more access to cheap capital. The cost of capital is how the world goes around. And margin debt at this point is becoming pretty aggressive. Now, what was also interesting in this is this chart, which I thought was pretty wild. As you can see right here, every time we've had a market top, whether it was 2000, 2007, 2021, or this like July 2025 kind of pseudo short-term top, margin debt was at an all-time high. So the blue line right there is the S&P 500. The purple line right there is margin debt. And as you can see, margin goes up, the market goes up, eventually the market peaks, margin peaks. So we do have a pretty easy indicator to determine when you could see markets top out. Does that mean this is the time? Do we have another 10, 15% to go before we get that top? I don't know. But nonetheless, with this much leverage in the market, as soon as you have a 3, 4, 5% drawdown, even like a 2% drawdown, a lot of that margin starts being called away. And people have to sell shares to pay back their margin. And that leads to more selling pressure. So that is one thing to think about in regards to all the leverage that is out there in the broader equity markets. Triple V, thank you for the $200 super chat. I can say Vlad now. There it is. Mr. Vlad is here. Thank you for being here on the market open. Dude, he was a really cool guy to get lunch with yesterday. It was really cool. He is someone who obviously, you guys know his story. I told you guys about him. Very humble beginnings, came from Russia to the United States, built everything, purely with pure grit and determination. And now he's very successful. He's very, very, but the cool thing about him, and this is similar to Derek, right? And you guys got to meet Derek yesterday and talk to him. They don't really care about their money or care about their wealth. I mean, the line that stuck with me yesterday from Triple V, he was like, tonight I'm going to have one dinner, not 2 dinners, So it's like, yes, I am successful. Yes, I've made money in my life, but I still eat one dinner. I still have to go to the bathroom. I still have to go to the gym. I still do everything like a regular human being. And I think that level of humility is also very, very important. Because sometimes you get that much wealth, you start thinking no, you're a superhuman. You're more than the average human. And then you get humbled in a really bad way. And so I think that's one of the most interesting parts about Triple V and his journey. So yeah, it was cool, dude. It's cool. Also, by the way, I got the story now for why he was freaking in Africa sending us Kenyan shillings. He just climbed Mount Kilimanjaro. So he got to the top of Mount Kilimanjaro 3 weeks ago. That's why he was sending us. He was like, I was in Zimbabwe and I tried to like send stuff, but YouTube wouldn't let me. I was like, this is hilarious, bro. So yeah, he had a nice little trip to Africa and tried to send some super chats. But thank you, Triple V, for being here. Thank you for lunch yesterday. And thank you for being part of the channel. All right, so Nvidia right here still down about 1.3% right now based on that headline yesterday from Jensen. Jensen also said this morning, if you buy stock in TSM, you are a smart person. I thought that was very interesting for Jensen to say this morning. So he was kind of propping up TSMC a bit. By the way, remember the United States trying to take an equity stake in TSMC based on the condition that they gave them equity grants for the Chips and Infrastructure Act that Biden passed? TSMC came out last night and they said, we will give you back your money, but we are likely not going to give the United States equity. So they're like, hey, if you guys want to take back the like $7 billion you gave us, you can take it back, but we're not that interested in an equity stake. And so I think the idea of the United States actually taking stakes in companies, I mean, I don't know. We're going to see if that ends up playing out, but as of now, it's not the most easy way to see that coming through. Now, again, this was the headline. Nvidia is working with Washington on approval to sell a new superior AI chip to China, which would be a smaller version of Blackwell. Huang said it's too soon to know if the U.S. will allow it, but stressed U.S. chips should stay in China's AI stack. Otherwise, Huawei will have China covered. Essentially, Nvidia saying, hey, like if we don't do it, someone's going to do it. So you might as well have us do it, which I think makes sense to me. I think that makes sense to Trump as well. But I think it's just Trump's just trying to get the best deal he can to actually sell them into China while still making his 15%. So Nvidia going down on this, I think is just so stupid, dude. Like at the end of the day, it's Nvidia. They are going to win. They are selling, as Derek said, the picks and shovels to every single company that's relevant over the next 10 years, including the robotics companies. And we've barely begun scaling robotics. I mean, there will be billions of these robots that have chips in them. So taking a long-term perspective on Nvidia versus like crying about China revenue, I think is important here. Nonetheless, you do have a bit of a sell-off right here. Speaking of Taiwan as well with TSMC, this headline came out yesterday, and I thought this was actually pretty bullish for Palantir and a lot of the other defense stocks. Taiwan is massively hiking their 2026 defense budget to $31.3 billion. That's a 23% surge in defense spending for 2026, reaching $31.3 billion, the first time above 3.32% GDP since 2009. So now you have Europe that's spending almost 5% of GDP, or at least NATO, I should say, on defense, and you now have this with Taiwan. And the main reason for this is driven by Chinese threats and U.S. calls that the budget now includes Coast Guard and veterans, aligning with a quote-unquote NATO model. So the risks of a China invasion have never been higher. We did listen to that podcast, or a clip of that podcast 2 weeks ago, of the Chinese economist saying it's probably going to happen. The question is when China will do it. They're practicing what she calls strategic patience. And so Taiwan's going to have to guard themselves. And as a result, that probably leads to a broader increase in defense spend as well. What happens today if Powell comes out hawkish? So again, historically, I mean, on average, you tend to get a 2% drawdown on the S&P when he comes out pretty hawkish. Now, if he comes out slightly hawkish, which is not hawkish enough for the market to care that much, I don't know, maybe it's like 0.5%, 1%. But given everyone's becoming so bearish on it, I think he says, hey, we can't signal that we're going to have a rate cut, but we feel a rate cut is potentially possible in September. And that gets the market to be like, okay, at least there's a chance. We don't have to completely price it out. And we end up going flat, which is the best case scenario. Now, obviously, would I like us to go green? Sure. But Powell would have to be a bit more dovish for that. And we're going to have to see. What if he actually dresses up as a hawk? That would be quite funny if he does that. We do not get a new Fed chair announcement. Oh, well, maybe. I mean, look, Trump's speaking at 12 p.m. So I'll be live at 12 p.m. after J. Powell. We'll see what Trump has to say at the White House. It's an Oval Office address. I mean, I don't know, dude. Maybe he announces the new Fed chair right after J. Powell speaks to kind of undermine the legitimacy of J. Powell. I don't think the Trump team has come to that conclusion yet. They've narrowed it down to like 12 picks. And I think realistically, they narrowed it down to 4 picks. Kevin Hassett seems to be at the top of the list based on what I read. But I don't think today's the day where they drop the bombshell on who's going to be the next Fed. Now, Wall Street Journal reported today that Peter Thiel's Founders Fund has piled into Ethereum plays, betting it could become Wall Street's financial backbone. His stake includes 7.5% of ETHZilla, whose market cap just jumped from 18 million in July to 741 million, and 10% of BitMine, which is now worth 8.3 billion. So Peter Thiel really drawing a line in the sand in terms of how bullish he is on Ethereum. Ethereum itself has not been that bad this week. I mean, we've had a little bit of a drawdown across the high beta names. Ethereum still at 4,200. Kathy Wood has sold some BMNR this week, so she's been taking some profits. The ETH inflows in regards to the ETFs last week was at 2 billion. Let me check this week. Yeah, this week actually not been the best week for Ethereum. As you can see, on Monday they lost 60 million, Tuesday 900 or 100 million, Wednesday 429 million, and then yesterday 240 million. So they gave back about, call it 800 million of that 2 billion they got last week, as people have been kind of leveraging out of these ETH ETFs. But I think it's also because people are afraid of Powell. Like, this entire week has been defined by what is this guy going to say? And that's kind of leading to some of the pain around Ethereum as well. So that's what we got. Yes, and that's why Tom Lee's stacking ETH, right? I mean, all we're doing is selling cheap Ethereum to Tom Lee, who has 20 billion to buy it. So either he's going to be wrong and Ethereum's going to completely tank and like it's going to be $20 billion wasted, or he's going to get to bid up the cheapest ETH that we've seen at least in a couple months. And that would be very exciting for him as well. Now, speaking of leverage, when we talked about leverage debt being as high as we had in 2025, here's another stat that once again indicates that retail activity is skyrocketing. The 3-month average volume of U.S. equity call options has reached 34 million contracts a month, nearly an all-time high. That has tripled over the past 5 years. At the same time, the 3-month average volume of equity put options has fallen from 26 million to 23 million, aka people are not buying as many puts as they're buying calls because obviously they're more bullish than bearish. And on Friday alone, last Friday, 71 million option contracts were traded. Year to date, 58 million contracts per day are trading hands. What's interesting about this, as you can see right here, this is an equity US call options 3-month average from 1992 to 2025 chart, is that Robinhood's the biggest beneficiary of this. Robinhood, IBKR, Webull, I mean, the platforms where people are meaningfully trading options, Schwab, Fidelity, they are going to get a lot of momentum from this. So I think Q3 is going to be gangbusters for Robinhood. It's going to be a very strong quarter, especially because August has been decent so far. But it also means, dude, there's a lot of people trading. And there's a lot of people that are levered up. And given there's a lot of people trading, there's a lot of people that are levered up. If you have any level of a correction, there could be a really nasty drawdown from that. And I think we just all have to be prepared for that. Like, it can't be surprising when Kanye West launches a meme coin and then for us to realize, why are we down 5%? Like, there's too much froth. There's too much leverage. There's too many call options. The party can keep going. And we've justified in many ways why the party keeps going just based on AI earnings alone. But if the party does stop, I just don't think anyone can be surprised by it. It's not like we didn't know this stuff was happening. And so I think now we just have to hope that the party can continue. But also, if the party does stop for a little bit, I think it's not the party's ending. I think it's more so, hey, the froth is there. The froth needs to chill out. If the froth does get chilled out, then, you know, money can actually come back to the companies that matter. Open Door right here is down, or it's up 1%. It was up 11% yesterday. Eric Jackson continues his Open Door pursuit of greatness. He went to Drake's house again yesterday for day 3 of trying to get Drake to buy Open Door, which, again, it makes me want to buy Open Door just based on the pure level of like commitment this guy has. But it's also like, dude, it's weird. It's really weird. Again, I showed you the video yesterday of Eric Jackson being at Drake's house, and I don't know, dude. They're going above and beyond to try to get Open Door to be pumped, and it feels frothy. But what else do you say? This was him last night on Bloomberg when he was asked the question of, when do you sell Open Door?
Stock up 575% since June 1st. Since July 1st, excuse me. Have you sold any?
No.
When will you sell?
I don't think it's 82 yet, Tim. I mean,
right.
if they put some effort into this could be a $500 stock.
Oh wow, $500. Okay, the all-time high was back on February 12th, 2021, 34.59. Stock.
I mean, he's calling for a basically 125x from here. I don't know, bro. Like, when you have these types of people getting this much attention, it obviously means that there's a lot of money flowing around, or Open Door really is the best thesis ever. And I personally just don't get it, right? Like, maybe it's my ignorance versus extreme froth, but It's toppy, right? Yeah, it sounds toppy, dude. Like this is supposed to be some respected hedge fund guy just throwing out $500 price targets and then going to Drake's house in Canada to convince him to buy open. Like it's weird, bro. It's just a bit weird.
It's called the top.
Derek said it's called a top. So I don't know, bro. I don't know. Like I've been defending this market for the past 5 months, but this stuff is hard to defend. And then the Chamath SPAC, like that happened last week. Like it's hard to defend this stuff. UNH right here up about 1.17% in the pre-markets. CoreWeave right here down a little bit. S&P is up 0.3. Amazon's up 0.4. Rocket Lab's down a little bit, and then AppLovin holding 14. All in all, even with the volatile week that we've had, I mean, even Palantir is still at 155. It was at 142. I know it's not at 190 anymore, but probably healthy for it to take a bit of a breather. I think the markets are doing okay this week. I know it's been a rough week. AMD 180 to 165. Yeah, Tesla 335 to 320. But it's like, it's not been one of those weeks where you're like, man, I just survived that week. It's like, no, it's been a week. It was all right. We had 1% down, 2% down. It is what it is. But in the next 40 minutes, when Powell speaks, that could really determine what this week
Don't turn that light off.
ends up looking like. Yeah, you can. Yeah,
That better.
yeah, that's good. I see a real opportunity with Open Door paving the way for tokenization of real estate. Could be great leadership and could still go bust. Yeah, I mean, tokenization I actually think is a real thesis because I believe in that thesis. The problem is Open Door enough of a tech company to pull that off? That I don't know. And it might take some time to see if Open Door actually is the company that is like the one that's seen as the one to actually figure it out. But time will tell. Time will tell to see how it happens. Neo's up a little bit. That's actually a big green. Neo right there. Wow, it was actually up 9% yesterday, up 6% today. I don't know if they had earnings. Oh, by the way, we did have a bunch of earnings yesterday. I was not live on the market close, so I didn't get to cover those earnings. But let's pull it up. We had a bunch of SaaS companies, Workday, Intuit, and Zoom. We had BJ's this morning. I already know what the comments are going to be. So go ahead, because I know what the comments are going to be. But BJ's had earnings this morning. They beat by 5%, 114 versus 109. Missed on revenue, 5.38 versus 5.4. Revenue's up 3% year over year. EPS is up 5% year over year. I'm more of a Costco guy because that's what's near me. But BJ's right here down 7%. So I got to go deeper into the earnings. This is a really important company, though, because they're a big box retailer for a lot of different goods. Market cap for these guys is $14 billion. So relatively small company, but important when it comes to retail sales. So yeah, everyone's a huge fan of BJ's. Yeah, everyone. They just love the store so much. So I will go through their transcript and see what they said about tariffs and the consumer. Outside of that, Zoom beat by 11% on EPS, 153 versus 138. Revenue, 1.21 versus 1.20. They beat by 1%. Revenue is up 5% year over year. EPS is up 10% year over year. Again, Zoom, great company, great product. I pay for it every month. They just don't grow. Zoom's up 4% right here in the pre-markets, but it's just not one of those growth plays in SaaS. Workday, revenue's up 13% year over year. EPS is up 26%. They beat by 4%, 221 versus 212, 2.34 versus 2.34 billion. So they came in line on revenue. Again, another company that at least matched earnings expectations, which is important in this market. Workday right here is down 6%. So it looks like maybe their guidance was not the best. And then finally, you had Intuit. They beat by 3% on EPS, beat by 2% on revenue. EPS is actually up 40% year over year. Revenue is up 20% year over year. This stock, I think, is actually having a good year. Intuit right here is down 6%. Maybe I'm wrong. Intuit stock year to date, it's up 12%. Now it's up like 7%. But over the past 1 year, it's up 5%. Yeah, so I guess it's been a rather flat stock, very small dividend here. Big software company. They own a lot of different smaller companies like TurboTax and Credit Karma and all those guys. But this one up about 5% year to date. Tempest acquires AI pathology firm Page to boost data, team, and tech. I did not know that. Looks like Tempest made their first acquisition as a public company. That stock is flat, but it is up 200% since Nancy Pelosi bought it. So her call options are doing very, very well. Duolingo, again, this one's causing a lot of, I did not know when I picked this in my stock draft, it would become like a stock that people care so much about. But Jeremy is short. Joseph Carlson is not. You got a lot of people trying to figure out what is the bull case, what is the bear case for this. But yeah, Duolingo is now becoming a name that people really think about. Again, I wouldn't short it. I don't know if it's the best long. It does feel cheap given its growth, but I just don't know how you short 40% growth over the past 2 years. Like, unless the growth slows down, maybe it does, but it doesn't seem like that's happening at least yet. Oh, Roy has a position in it. Roy bought in. Oh, wow. Okay. I did not know Roy bought in. All right. So looks like Roy's in it. Which Jeremy Financial Education. He put out a video being short Duolingo. SBet, they did a buyback today, or they announced a buyback. SBet right here, that's up 3.4. Again, they are below their NAV as well. They're not really getting that Tom Lee premium. Yeah, wow, $1.5 billion buyback program. Okay, so this is also, dude, I like this, but it's also weird. Like, even when Tom Lee's BM&R, which I'm a big fan of, when they announced a $1 billion buyback, I also thought that was a bit weird. Because, again, the argument is, hey, if we fall well below our NAV, we're just going to buy back our stock. But that money could also be used to buy Ethereum, because if you fall well below your NAV, it's probably because Ethereum's tanking to, like, I mean, I don't know, it would at least be below 4,000, right? And that's not exactly what we're seeing right here. So it's just weird that some of these treasuries are saying, hey, let's like buy back our stock versus buy cheap Ethereum. But that's what you're seeing right there. Sharp blank right there, $1.5 billion stock buyback. And that is kind of keeping it green, but still relatively flat from $27 price that it was at. It's the idea of a buyback. Yeah, that's also fair, because these guys don't actually have to buy back their stock. They're already diluting by so much money to buy Ethereum. So more dilution to buy their own stock on a name that's going to constantly have dilution to buy Ethereum just feels weird, versus just buying the Ethereum outright and then hoping that your MNAV ends up going up. Roy bought about a 2.5% position in Duolingo. Wow. All right. Duolingo, pump my bags, bro. Trying to win this stock draft. It's the old, if I didn't have this pick, I think I would be at least up to Matt in terms of performance, or, you know, not as bad as it is, down 30%. So maybe you're going to have a lot more people getting excited about the owl here. Who is Roy? Roy is Crossroads on Twitter. I'll leave his Twitter right here in the chat. He also does the Tech Bros podcast with me. Good friend, great guy. He's going to be with me and Tanner in Vegas for the Robinhood Summit. So very excited for that. Robinhood, Vlad did another podcast yesterday with TBPN, which is like this big technology podcast. And there were some good clips of it. I think Vlad has done almost 10 podcasts in the past 25 days, which is crazy. But he is getting his name out there, getting his message out there. And again, it's just exciting to see him execute, regardless of where the market goes. I think Robinhood's going to have a monster Q3, and this is just not a stock that I just do not want to sell for a very, very long time. All right, folks, here we go. 15 seconds. It is Powell day. In 30 minutes, we get to see what Mr. Powell does to this market. But for the next 30 minutes, let's just see how these stock prices react as we get into it. Ladies and gentlemen, it is Friday, August 22nd, all the way from Miami, day 2. The stock market is now open. All right, let's get into it. Wake your ass up. S&P 500 opens up at 637. 637.72. That's up about 0.34%. Not too bad for the S&P 500. UNH 306. That's up a little bit. Nvidia goes down 2%. Opendoor goes down 0.5%. NEO, that is up 5%. Palantir, that's down 1.2%. CoreWeave, that's down 0.5%. Amazon 222. That is also slightly green. Rock Labs down 1%. AppLovin is down 1.19. Elf is down up, or Elf is actually up 0.1%. Google breaking through 204. That's up 1.85%. Hoodie goes down 1.67. Hood actually got to like 108 yesterday, then came back down. Again, it's really trading in this consolidated range, likely waiting for what Powell's going to say. SoFi 23, that closed yesterday at about 23.30. Now it's at 23.07, so that's down 1.2%. Grab right there, just above $5. Walmart is slightly green. Home Depot, slightly green. Walmart and Home Depot didn't have bad earnings, but those earnings weren't like phenomenal given their guidance on tariffs was not the best. Didn't tank, but also, you know, didn't head up 5 or 6%. You guys said it sounded like a Tinkerbell. It definitely sounded like a it definitely sounded like a Temu Tinkerbell. That is correct. Visa right here at 347, MasterCard 596, Oracle 233, Bitmine 4715. That's down 1.5. HIMS down 2%. Everything's down, and if it's down, it's slightly down, and the things that are up slightly, like the Qs are up 0.1%. I think the next 30 minutes, people are just waiting for what the heck Powell is going to say, and that's when we're going to see some real action. S&P slightly up. Nvidia now down 2. Nvidia was at 168, bounced to 175, now down at 171. So covered calls this week also have been going really well on a lot of parts of the market. And you have some of the pain that is there. Open Door is down 3. That goes down. Nebius down 2. Ethereum down 0.48%. 42.59. Again, not doing as bad as some of the other high beta growth stocks. Where is Reddit? This one fell to 209. I think it's at 217. Reddit is at 214. That's down 2%. Honest, this stock 391. That's up 6.2%. Tesla 321. Neo 580. Palantir 154. SMCI 1.3. So all the semis go red based on this Nvidia headline of them not selling the H20 to China anymore, which to me is not a headline, because if they're going to sell a better version of Blackwell, then that should be okay. But short-term reaction is that that's bad. Dell is slightly green right here. AMD probably moving with Nvidia down. Yeah, AMD, well, trying to get a green candle right there. 163.18. That's down 0.3%. Trying to go up. But that one is slightly down. India to make fighter jet engines with France. Dude, India's doing everything to like not cooperate with the United States. And as someone who's Indian, I just think it's really stupid, because it's like, sorry, Mike's like hanging on by a thread. I just think like we need to work with the US, not the adversaries of the United States. But nonetheless, that is what they're trying to do. Reddit right here, down 1%. Open Door 344. And then Neo 581. That one is also slightly down. Gravity. Yeah. Yes. The microphone just experienced gravity. Sounds like India is being vindictive. I'm not saying India has to stop buying oil from Russia, and India stop cooperating with China, but they're acting like China and Russia are their buddies and not the United States. I'm like, dude, I get it. Not everyone loves Trump, but China and Russia are not your buddies compared to the United States. So as an Indian, I'm just like, I don't know what these guys are doing, but I do think a trade deal will happen towards the end of the year. Robinhood right here, 104.56. Snapchat is 5 cents away from going below $7. This thing has not went below $7 in almost a year and a half. It looks like there's a world in which it can try to get there. You think the USA is best in everything? A little bit biased? I mean, obviously I'm biased. I was born in America. I consider myself American before I even consider myself Indian, to be honest. But no, the United States is not the best at everything, but I think we're kind of better partners than China and Russia. So it's like, it's just weird that they're going that route. And they have the highest tariffs on us. Like, Trump's not wrong when he says India has ridiculous tariffs on us. They need to bring it down. And so I don't know why India's acting like they barely have tariffs on us. It's like, no, dude, you have the highest tariffs on us ever. Like, literally out of the G7 countries, India's the highest. Or the G20 countries. And so it doesn't make sense that there's not any cooperation there. SMH right here, 287. That's down from 300. Bitmine, 47.93. Novo catching a bit of a bid at 57.83. That's up 2.84%. Adobe, 355. Salesforce. Adobe and Salesforce, again, classic SaaS names that have just not made a move. The market's been thinking that a rotation might play out, but that rotation so far has not actually begun to play out. Hood is not tanking, even though we like saying Hood is tanking every day. That's down 1%, but 105.15 is what we have on Hood. China and Russia didn't declare economic war with the entire world. Okay, like, let's not be hyperbolic. Okay, that like, we had that in April, and then I think we can all tell at this point it was a negotiating tactic. And look, I was freaking out at the time as well. All of us were freaking out about the tariffs because our portfolios were done. But we've seen the deals that this guy's been making. Do I love every single way about how he went around it? No. And is it perceived as an economic war across the world? Yes. But we also got the EU to just buy $750 billion of oil. We got them to invest $600 billion inside of our private sector. I mean, like, at the end of the day, if Trump was going to shake things up, he shook things up. The market had a crazy dip. We all had one of the best opportunities ever to buy the dip. And now we're trying to get things back to normal. Now, the long-term effects of shaking things up, I don't know how that plays out. But I also think it's not crazy for him to say, wait a second, India, we don't do that much trade with you. Why are we paying 115% on alcohol? Like, can't we renegotiate? And why are you buying all this oil from Russia and not like having a conversation with us about oil? And I just don't think that's absurd. Maybe I'm being too American here, but I don't think that's absurd to have that conversation. Say, hey, this is not the worst thing in the world. Now, granted, did Trump get everyone to hate the United States? Yes, that's also true. But at the end of the day, I don't think the EU loves the United States. They still did a deal with us because you got to get a deal done. And sometimes you need a deal maker who's going to make you resent him, but still try to get some level of cooperation done. Spotify right here, 690. That's a 0.19. Netflix, 1206. That's flat. Lockheed Martin, that's up a little bit. You would think the defense stocks would be up a little bit more because of the Taiwan announcement in regards to defense spend, but that one not as aggressive based on the Taiwan deal. Google's Waymo granted first ever permit to start testing autonomous vehicles in New York City under strict safety rules. So Chicago got a permit, or Tesla applied for a permit in Chicago yesterday as well. So you are seeing the ramp up of some of these contracts in regards to Waymo and robotaxis from Tesla across the entire United States. Waymo's also going to Philly. Obviously, they're already heavy in San Francisco. Elon's trying to get to San Francisco. Microsoft right here, 504. The Q's going up a little bit. You got somewhat of a green candle in the Q's, up almost 0.3, which is actually not bad given it was almost red 10 minutes ago. So you're getting a little bit. That's not being led by Nvidia, though, so that's got to be led by something else, because Nvidia is still flat. Microsoft, that's green. And then Meta, is that also green? Meta, again, $10 billion deal with Google for cloud services. Meta as well, slightly green, 741. The European deal says that the 600 billion has to come from private companies and the EU cannot enforce it. Yes, I agree. But based on the template that they put out yesterday, or it was like a sort of memorandum of understanding that they put out that laid out all the terms of the agreements. It said $600 billion will be invested. Now, will it be invested? I don't know. And the EU obviously can't force those companies to invest it, but they can definitely incentivize companies to hold up their end of the bargain to invest. Will that happen? I don't know. But you got something on paper, at least, that says maybe they will. And so over the next 4 years, we're going to see how that plays out. It's also very similar to Apple. Apple promised to invest $300 billion back in 2018, and I've never seen that $300 billion invested. Now they promise to invest $600 billion. I don't know if it'll actually be invested, but there's even a chance that that stuff does happen. Maybe not the worst thing for the economy. UNH right here at 309. So UNH is catching a bid, at least. Well, everything else is starting to get a little flat. S&P as well, starting to catch a bid. We'll get the heat map in a couple minutes on the broader market, but S&P 638 and the Qs 560. Maybe it's a Jay Powell head fake before 10 a.m., which is when he speaks. I'm not buying anything before 10 a.m. I would really like to see what he says, but you might have some algos coming in, and that could be leading to a bit of a bid that we have on the S&P and the NASDAQ right here. Powell's at 10 a.m., not 1 p.m. Powell's at 10 a.m. So we're going to see what he says. Let's get a little bit of coverage on what to expect from Powell, but it will be happening pretty soon.
Scenario, if you felt like this was just a little bit of a stutter step. If not, if we crack through, if the semis can't, as a group, find their footing, then maybe we have to get a little more oversold and get people a little more scared.
Right. Workday, another example of software and tech. Actually, it was a beat. Sales were in line up 16. They actually had a small boost to the full year guide. It's retesting or close to year-to-date lows.
Yeah, it is. There's obviously this pretty persistent.
No treasury company, selling shares to load up on Ether for this one, and the market values skyrocket because of it. And actually, there's a little air coming out of one of them today, but Bitmine is another one, also backed by Peter Thiel, recently raised $250 million to buy Ether, up more than 1,000% since late June, with a market value of multiple $1 billion.
ETHZilla, there's about 36% of the air coming out of it this morning. I think Peter Thiel's group is registered to sell some shares. Yeah.
That's the other reason ETHZilla is getting kicked right now. So although Peter Thiel owns a lot of it, this stock, wow, 37% down. I mean, the filing that came out last night was that Peter Thiel is also scheduled to sell some shares. So although they are piling into it, they are going to be able to pile out whenever they need to. And that is why you're seeing some pain on ETHZilla. That's probably why SBET and BMNR are getting hit a little bit, or we're getting hit in the pre-markets. BMNR now is flat, which is nice to see. That was down 3%, and then SBET actually up 2% with the $1.5 billion announcement on their buybacks. Calling it Ether is cringe. Yeah, I don't see that many people calling it Ether. That is the technical name for it, though. But the fact, that itself is a top indicator to some people that, CNBC hosts are talking about Ether, which is a very crypto-oriented term, on live television. It just makes people think, hey, maybe there's too much attention on some of these asset classes, and there needs to be a bit more of a correction. Tesla's trying to run 324. The only headline I had on Tesla this morning was the Cybertruck going green. or not going green, but the Cybertruck increasing their prices, which is, I guess, getting Tesla to go green. Elon, by the way, has deleted some of his posts as of last night. Some of you guys that follow him might have seen some of his posts, but it's like very weird, like anime girls that are Grok companions, and like even the Tesla bulls that will defend Elon to the death of him. We're like, Elon, this is getting ridiculous. Like, it was weird, bro. So this morning he actually deleted some of those tweets. And I'm just like, dude, the reason it's bearish to me about XAI is because I think they realize they're losing so much to OpenAI. And I pay for Grok. So I'm not even trying to be biased here. Like, I genuinely think Grok is better, but OpenAI has more users. And I think someone in the boardroom was like, well, what if we go a sex angle and try to get people to get on Grok using that form of marketing? And I don't know who said that was the right angle, but then Elon, to his 250 million followers, started tweeting all this shit. And it's like, dude, it's just weird, bro. It is just weird. So Nvidia right there trying to recover almost at 175. It makes me bearish on XAI, dude. It actually does make me bearish. I'm like, if they're that desperate to pump Grok numbers with that way.
I'm an investor.
Derek said, I'm an investor. Yeah, Derek did invest when it was 18 billion. And look, XAI will still be fine long term. It's just weird. Dude, sorry about the mic. It's like being held up with two boxes right here. But it's just weird because it's like you shouldn't have to use that angle to get users.
Bro, porn's #1 traffic thing in the world. It's
Yes.
the internet.
I mean, yes, obviously pornography is bigger than the internet, but still, it is just weird. It is very, very weird. Sex sells. Yeah, of course sex sells, but it's like, dude, it's an AI product. It's not supposed to be associated with that. But I guess that's the route they're going. S&P really getting a pump, folks, almost at 640, up 0.5% right here, which is not too bad. I don't know, dude. What do we think? Let me do a poll in the chat. Do we think this is algos pumping for the hell of it?
100% it's a fake.
Derek said it's a head fake. Or is this something real? This is pumping right before Powell speaks. Definitely doesn't feel the most bullish. Feels kind of fake. 62% of you said Powell will go hawkish. Pump before Powell. Head fake or real? Does the market know what he's going to say? Maybe that's why we're getting the pump. Does the market think it's not going to be as hawkish? Reddit right here, that is about a break even. Tesla going up. Meta 742, Apple 226. I don't know. It feels like a fake out, dude. You're telling me the S&P barely goes up 0.5% this whole week, and then 20 minutes before Powell speaks, it starts going green? Like, it doesn't feel like it's that. And it's still going. It's still going. New highs of days. There you go, 639.40. She is still going. He will be dovish because everyone thinks the opposite. That's part of what I think could play out. He will be dovish because everyone thinks he's going to be hawkish. And maybe the market's pricing that, and then that's why we're going up. I really don't see how Powell could say anything good where cutting means like employment is effed and not cutting is stagflation fears. Yeah, I mean, look, I agree with that argument that if we're cutting, it's because we're afraid of the labor market. The nuance here, which is a very important nuance, but it is a nuance that could, lead the bull market to continue being a bull market, is if the labor market is bad, S&P is still going, but it's not that bad, but it's bad enough to cut. And so we get the cut, but then we don't get economic deterioration because the labor market's bad, but it's not that bad. That's where I think you have this fine line of like, well, the cut is bullish then, because historically cuts are bearish, right? Because that means you need to stimulate the economy because the economy is doing bad. We haven't had cuts in 9 months because the economy has been doing good. And the earnings growth in Q2 just proved that to us. But we also have an S&P trading at historical multiples because it is pricing in lower rates. You don't need lower rates for Nvidia or Amazon to have good earnings, but you need lower rates for the broader economy to function. And if the labor market data is saying that the economy is not functioning as well based on that job revision that we saw, then lower rates would help. But the labor market can't be that bad to the point where lower rates are a solution versus a defensive reaction to what could happen, aka a recession, which the rate cuts then would hopefully stop the recession. That's kind of the whole point of that soft landing. We don't use that term anymore, but back in 2023, that was the core term that Powell kept using about if you could land a soft landing. And so today's going to be a classic example on if that could play out. The meeting is in 15 minutes. The meeting is in 15 minutes. Yes, it will also open up the housing market, which is very important. New home sales yesterday was actually way better than expected. So that was nice to see from a housing perspective. And interest rates or mortgage rates have come down. However, the amount of inventory available for homes just in the country is at 10 months. The average is 5 months. So there's a lot of homes ready to be sold that have not been sold. By the way, we had Canada retail sales come out this morning. The street expected 5%. They came in at 6.7%. So Canada's economy, at least from a consumer expenditure perspective, not that bad. And hopefully Powell following up with a little bit more dovishness could have that factored into the broader stock market as well. U.S. retail sales obviously were really good last week as it came in at 0.5%. What's your take on Zillow? I like Zillow. I don't own it. A lot of hedge funds are buying this one up. I think they're using it as a rate cut proxy. I think it's a better rate cut proxy than Open Door. It's not going to be as volatile as Open Door. Open Door right here up 3%. So maybe Open Door is a better proxy because it's just way more volatile. But Zillow has been kind of dead for the past couple of years because of the housing market. And so I think that should start to open up. Abhishek says, I'm in Canada and things are bad here. That anecdotal evidence is somewhere in the United States, right? Like we see the labor market outside of the last job report being really good. Last one was not good. But again, anecdotally, a lot of people are saying, well, I run a small store in the United States. I have a small business and labor market's not that good. So the aggregated numbers don't tell the full story. And that might be the same in Canada. But Canada's CPI is at 1.7 and the rates are at 2.75, right? United States CPI is at 2.7, rates are at 4.5. It does feel like across the world, maybe some central bank easing, some quantitative easing would not be the worst idea. Just for 25 bips, like no one's asking to bring rates down to like 2021 levels, but 25, and that's where I agree with Trump. It's like he's asking for 25 bips. And if it's horrible, then pause for the next 5 months or worst case hike again. But like the idea that 25 bips ruins the economy or massively accelerates inflation, it's just hard to believe that happening. And the problem with J-Pow is it's almost like he's determined to like make sure that potential probability never happens when the probability of that might be less than 10%. Yeah, Fed Collins, they had a quote last night. We cannot wait for all of the uncertainty to be behind us. We see upside risk to inflation, downside risks on labor. You can interpret that as bullish or bearish, but one could argue that if there are downside risks to the labor market, then maybe we need to have a rate cut. Trump does not ask for 25 bips. I agree. Trump is asking for crazy stuff like 200 bips, which I don't agree with at all. But giving 25 bips maybe would not be the worst thing in the world. Oh, we had Tom Lee on the Compound and Friends. He just did that podcast. The title is Tom Lee Says It's Still Early. Okay, hold on. We're obviously not going to listen to the whole thing because it's an hour and 20 minutes, but there's a chapter on Palantir. Let's just see what he has to say. Because I don't think it's going to be that specific on Palantir. It might be specific more to high beta growth names. Let's pull this up and let's give Tom Lee a couple minutes here and see what he says.
Yeah, I can share a story of a company, but I can't tell you the industry it's in because they asked me not to say, but they're a really big company.
Adult entertainment industry.
No.
Okay. Say more.
But they're really big and use the supply chain. And they said that they were like, they have a commodity that they got to hedge and they kept losing money on their hedging. And then they were losing money on the supply chain because like they have to buy this commodity and they have to package it and sell it. Then they brought in Palantir and then they like just fed every one of their invoices and all the truck times and literally every trade they did for hedging. And then it just spit out this like series of recommendations. Now they're making money. Their hedging of their commodity is a huge profit maker. And their operating margins have asked, and then they said they have no idea what Palantir did. It's like magic.
Yeah.
So and it was like it wasn't like a bunch of consultants coming. It was like literally they just fed this into like.
Can I ask you about Palantir? So I listened to their conference call for the first time. I'm like ridiculously late to the Palantir story. I sort of understood that it was a government contractor primarily that was now going to go into commercial and talk to corporations about how they can take their magic and apply it to every industry. And I love the story. The stock is $400 billion market cap. They're predicting $4 billion in revenue for this year. So it's like everybody gets it. I don't know how much opportunity there is in the stock right now. But it was remarkable, the stats they put up on this call about adoption of people hiring Palantir. Like,
Yeah.
I think they added like 1,000 corporate customers in a quarter or something crazy like that. Is that the kind of company that you think transforms American business to the point where you get that re-rating in small caps,
Yeah.
and finally you get valuation expansion in
Yeah.
mid caps because Palantir or somebody like them comes in and completely transforms the company, and Wall Street then gets shocked on the next quarterly earnings report?
Yeah. 100,
Okay.
I did speak to Palantir because I saw them at an event, and this is what. So even like our company, which is only 33 employees, but we of course have big asset management and we have tens of thousands of clients. But I was like, could you guys just drop it in, like make us better? They're like, just let us do it. And
Can you do it for free?
yeah. But here's the thing. My business partner at Mosaics says that, he has this term called grifting. Palantir eliminates grifting in your business model.
Okay, say more.
What they mean is like, they'll find where someone is taking money from you that you don't need in your operations, or there's too many people in this movement of something and you don't need them, or maybe internally you don't.
Grifting is harsh.
Well, I know, but it's
Inefficiency maybe would be a polite way of saying that.
Yes.
Okay.
I mean, but that's like a millennial term, like, because I'm not a millennial, but you know what I mean? Like they're finding how to get you from your revenue to your net income, or even more revenue without.
They're the new efficiency expert.
Yeah, and you don't have to be a better marketing. They're actually just saying this is how you should replumb your business.
So we have all of these magical companies that keep popping up out of nowhere, that are getting huge and pushing the value.
All right, not too bad. So that's what you got. I'll leave the podcast link in the chat for those that want to watch it. But I didn't know Palantir was inside of Tom Lee's fund strat. It looks like they're using that to increase their margin efficiency and productivity as well. You got BM&R right here that goes green. S&P high of day. Let's see the poll results. I think more of you said head fake than not. 70% say head fake. 70% say head fake. All right, we're going to see, folks. 7 minutes. 7 minutes until what Mr. Powell says for this market to see where we go from here. Everything's green. Things are very slightly red, but pretty much all the algos are coming in. They took Nvidia up. They took Palantir up. They took UNH up. They took Ethereum up. They've taken Robinhood up, AMD, Palantir, Meta, Apple, S&P, Zillow, Opendoor. Everything's going green. Lulu, SMCI, like no reason for all this green outside of the algos coming in and either giving us the head fake or telling us they already know what Powell's going to say and they're front running it. So one or the other. And we're going to find out today. And again, the other reason why today, the meaning of the importance of today can't be understated. This sets the tone for the next, not September, but 4 months. Because if you miss September on a rate cut, or you get a September rate cut, it really sets the precedent for A, a Santa Claus rally, which historically happens October to December. B, the ability to have more rate cuts going into that Santa Claus rally, which theoretically could fuel the rally, or it could create a 2018 Q4 scenario for those that lived through Christmas 2018 in the stock market. It was disgusting, 20% down. And then 2019, there was a nice recovery because Powell finally started cutting, but you had hikes into 2018. You had trade negotiations with China that just weren't going that good. People lost a lot of money around November, December of 2018. So I think today can set up the precedent for either scenario happening. It could also just go flat and we get nothing from it, but it will be very, very important to see what Powell has to say. Unity is also green. That is correct. I'm getting a Model Y Juniper tomorrow. Awesome. Congrats. It's going to be great. I think you'll enjoy the Model Y. I love my Model Y, but the Model S Plaid was just different. Was I investing in 2018? So I downloaded Robinhood. I had a couple stocks here and there. But my friend was investing in 2018, and he was deep into call options on none other than Snapchat. And like he was doing weekly calls. He also had no idea what he was doing, but he was just learning about the markets. And I just remember hanging out with him around, I think during finals of junior year of college. And he just looked depressed. I was like, dude, what's wrong with you? Like, we're about to have Christmas break. Like, what's going on? He's like, bro, I'm down $18,000. I'm like, what? Why are you down 18? Like, why are you? He's like, it's like I bought calls on Snapchat. I was like, what is a call? What are you talking about? It was like, basically, I thought the thing was going to go up. It didn't go up. And I was just like, okay, at least you still have your health. And he was so depressed, dude. So that was the first time I actually saw someone like, he didn't blow up his account, but 20,000 for a 22-year-old at the time is a lot of money. And that's how I just remember Q4 2018 wasn't the best. All right, we got 4 minutes. 4 minutes. Let's see. Let's get a little bit more coverage going into this. But in the next 4 minutes, we will have Powell. And we are going to see what Mr. Powell ends up saying here.
They said the last earnings season that prices are going to go up. So have you heard a number of retailers really saying the stagflation story, namely that we are going to raise prices and we're having losses because of tariffs, the automakers, and we just saw the Cybertruck pricing right now, of course, are the prime example of this. The question is, to Sarah's point, yes, these anecdotes are interesting, but are they showing up in the overall CPI? And the challenge now with the overall CPI, 1/3 is goods, which is where the tariffs are, but 2/3 is services. And the services ISM prices paid has really started moving higher. So you begin to worry that this is not only about goods anymore. And this was what Austin Goolsbee was saying yesterday. There is a fear that services could also move higher. And that just brings it back to Jay Powell's challenge today that, well, maybe inflation is not completely under control quite yet. And especially also with the dollar going down, also putting upward pressure on inflation, he just needs to step on eggshells here and be very, very careful in how
Dude, even the suits have no idea what he's going to say. You can see the Apollo guy. He's like, well, we think he needs to do this, but he can't get this aggressive here. He needs to not step on these toes. Like, everyone's just like, what is this guy going to say? And this is why being the Fed chair is one of the most coveted positions in the United States, because you have all the pressure of influence and fiscal and monetary policy, like direction. But you've got to want that pressure. Like, it's a very weird type of job, right? You have to want to be the guy that could be politically ostracized from both sides, but also have the influence to convince the country of what is the right direction on monetary policy. And for the past 6 years, Jay Powell has seemingly wanted that pressure. He's lived up to it, at least, from 2021, getting us down inflation 9.9 to 2.7. But I don't know if he expected to be this ostracized from Trump based on his view on tariffs. And today's going to be very important today to see where the market thinks this goes further from here. All right, so final poll. We got 2 minutes left, actually 1 minute. Let me put it right here in the chat. This is the final poll. What do we think? Will Powell be hawkish or dovish? Hawkish is no cuts or less likely for a cut. Dovish is the inclination that monetary policy is already too restrictive and that it is time to cut. Got about 30 seconds left, and then we're going to see what Powell says.
He is with us. Paul, it's been surprised at some of the commentary and Fed speak coming out of Jackson Hole from voters and non-voters, sort of playing down the weakness in the labor market and more concerned with the inflationary pressure, whether it's from tariffs or services, and not really sensing an urgency to cut rates.
I've been picking up on the same thing. And I think that robust debate, which reflects honest division, really applies more to the path after the first cut. It's not just the first cut.
He's right about that. The path after the first cut is the most important. Tesla's pumping into this. I will switch back once Jay Powell is live. He's not live yet, but Tesla, look at that, dude. 330. S&P 640. Wow, S&P just broke through 641. Dude, did it get leaked? He's not live yet. Did it just get leaked? S&P's up 1%. Oh, I hope it's not a rug pull. I really hope they don't pull the rug on this. AMD's up, Google's up, Grab is up, Reddit's up, S&P's up, Palantir 156, that's green. Tesla almost 330, Nvidia 176, that's green. Bitcoin probably is running as well. BTC, she's running as well, 114 or 113.4, and then ETH, or we have 4,300. We're at 4,375 on Ethereum. Powell's not live yet. Powell's not live yet. SoFi is running. I really hope that they do not pull the rug on this. This looks too real, right? But as you know, when it looks real, it ends up being fake. S&P 643. Are you kidding me? That is where we were 2 days ago when we had the 10% drawdown on the high beta growth names. Goodness gracious. Either they're going to pull the rug or someone knows that he's going to be dovish. It's either one or the other. We are about to see Tesla 332. It's a pump. It's like a legit pump until we find out if it's not. But it's green. Powell's still not live yet. He's about to go live, still not live yet, probably in like the next 2 minutes. But let's see. Oh, I think we got some quotes. Hold on. Oh, we got something. Hold on. Let's see. We have some quotes from his statement.
Policy says is in modestly restrictive territory, but the stability of the unemployment rate right now allows the Fed to proceed carefully. It's a lot of this but that in this speech. The inflation risks are to the upside, but employment risks are to the downside. With these goals in tension, the Fed will take a balanced approach to the dual mandate. Let's talk about on tariffs and inflation, later on jobs. On tariffs,
we're going to get the cut, baby. We're going to get the cut. Fed Chair Powell says in his statement that he's about to speak live about, we see a shifting balance of risks, which may warrant adjusting our policy stance. That is a rate cut, because he's not talking about a rate hike. So if you're adjusting your policy stance, which for the past 9 months was no cuts, that means we're likely getting the cut.
he says higher tariffs have begun to push up prices in some categories. He sees a 2.9% core PCE for July. That's up a tenth from June. He notes that there's a notable increase in goods, downward inflation in housing, and non-housing services, a key factor for him, have been a bit high. The effects on tariff consumer prices are, quote, now clearly visible. He expects them to accumulate over the coming months. However, a reasonable base case is the tariff effects, quote, will be relatively short-lived. Will continue to take time, however, for the tariffs to work their way through supply chains. Let's talk about what he said.
This is incredible, folks. The market loves it. Palantir 158, Robinhood trying to get to 108, S&P 1.3% on the S&P is no joke. It is, again, the S&P moves on average 10% every year. You got 10% of that happening right now. Here we go. Powell is live, and it looks like he's dovish.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly. including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations, to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a makeup strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
All right, that was Powell, ladies and gentlemen. Dovish. You got the entire market getting some green. It's not as green as it was like 5 minutes ago, so you got some red candles from the high of days. That's to be expected. Like instead of Robinhood being 109.50, it's 108.29, but it's not 103 anymore like it was 2 days ago, or 99 like it was 3 days ago. And that's what I think is the most important thing right here. Palantir 158, that's up 2%. Hoodie's up 2%. Nvidia is up 1%. S&P's up 1.3, 643. All-time highs is 647, so you're just at all-time high. SoFi 2424. AMD's at 166. Google is at 203. You're getting some momentum there. Meta 749. This was at 733 yesterday. Amazon's at 225. Reddit's at 226. Even Grab is pumping 512. That's up 2%. I mean, you are starting to see some momentum, and that is because of one statement from Mr. Jerome Powell, which is with policy in restrictive territory, the baseline outlook, aka the base case of what we are likely going to do, the outlook of the next trajectory for the decision-making in the Federal Reserve, and the shifting balance of risks may warrant adjusting our policy stance. Now, adjusting our policy stance means if the policy stance for the past 9 months has been a pause, there's either two things that could happen. It could either go up, which would be an adjustment, aka a hike, or it could go down, which would be an adjustment, which would be a cut. It's likely not going to be a hike, which means it's probably going to be a cut. I think the reason we're getting this pump right now, and look, it's 10:30. Maybe the pump dies out. Maybe we end out flat. I mean, anything can happen. Algos, options are expiring today. There could be a ton of things that happen. But the thing that's important here is that the uncertainty of what is Powell going to do? What is Powell going to say? How are we going to determine what the future of interest rates and inflation look like in this country based on everything we heard? And there's a lot of nuggets of different things he was talking about in regards to tariffs that was also super dovish, which we'll get into. Based on what we heard, it seems like he is ready to cut rates. I don't know if it's 50 or 25. I mean, there's a world in which it could be 50, but I think 25 enough would get the market excited. The probability for a rate cut was 69% this morning after Powell spoke. It is now 89.4%. 89.4%. Yes, he didn't commit to anything, but again, what he did say was that we have a balance of risks that may warrant adjusting our policy stance. Again, Powell knows what he's talking about in regards to the way he's wording it. So he can't literally say we're going to cut because that's just not how a Fed chair speaks. But when you say it the way you say it, in regards to adjusting our policy stance, unless we get some horrific data in September, which is possible, but if that's not the case, then I think we're going to be all right. Also, take a look at some of the tidbits of what he said. This part I think was very interesting. He said the neutral rate may be higher than it was in 2010, meaning we are potentially more restrictive than where we were in 2010, which is not too bad. On top of that, he also said the tariffs might be a one-time policy increase, aka we don't see sustained inflation theoretically from the tariffs, which is also very important. That was one of the big headlines from the speech because, well, if we don't have sustained tariff inflation, then we're not going to have that much pain in regards to the expectations of inflation playing out as well. These were some of the main quotes. The shifting of balance of risks may warrant adjusting policy. Situations suggest downside risk to unemployment rising. We can't take stable inflation expectations for granted. Tariff effects on consumer prices now are clearly visible, but they only might be a one-time thing. Trump is live. Oh boy. So Trump said he was going live at 12 a.m. Is he live already? How the heck is this guy live? He said 12 p.m. It's now 10:30. Let me see if I can find him. Where the heck is Trump? He's live right now? Yeah, he's live. All right, here we go. Here we go.
Grouting would look like they got put in yesterday by a top marble smith. So I want to thank you all, and I'll see you in 15 minutes, okay? Thank you. Thank you very much.
It looked like Trump was talking about crime in D.C.
Say he's trying to pay us off, and with the fake news, we can't be bought off. So anyway, so I just want to thank you all. We're going now, and I don't know if you're following. Are you following? We'll have a stop at the really beautiful, what will be beautiful. Right now, I can't use bad language, but it's been so badly run. And they built these cubes outside, these cubes.
Okay, so it's nothing about rates or the Fed. He is supposed to be doing some live meeting at 12 p.m. But you got Trump right there talking about the DC police situation. And he was live just now. S&P 644, pound cheer, 157 hoodie, 107.91. I don't know if we hold this 2% pump on the broader markets till the end of the day. We very well might not. But even if we don't, I don't think it matters. I mean, it would be nice to hold this pump. But the fact that he signaled he is more likely to cut versus pause, I think is the only thing the market's cared about, which is why they're happy. And that's what matters. Yes, Trump was wearing a hat that said Trump was right about everything. That is correct. Yeah, he was wearing this hat. So, I don't know, dude. Seems rather bullish in regards to price action. Ethereum also, dude. This thing was $4,000 2 days ago, $4,500. It got to $46.50 5 minutes ago. So Ethereum price action as well, which obviously BMNR has been a beneficiary of. That's up 7.8% right here. BMNR was at 54 at one point this morning, now 51.50. Not too bad. Not too bad. So Open Door as well, is that green? I mean, everyone's portfolios should be up a decent amount, even if it's not up as much as it was 5 minutes ago, because you do have some red candles. It's not as bad as it has been over the past couple days. Wow, Open Door, 417. Hasn't broke above $4 in about 3 days. And last time it did, it was there for like 2 seconds. Then it went down. Open Door actually holding some momentum. The rate cut from a real estate perspective, not the worst thing for Open Door. That's up 15% on the day as well. SBET's up 10%. Open Door is up 15%. BMNR is up 7%. Tempest, which had an acquisition this morning, that is up. What do we think? I mean, was that Tempest up 8%? Was that what we wanted to see? Because I don't know how that could have been better. because there were some quote unquote hawkish things he said, because you like have to say, you can't just be like, hey, everything's fine, everything's not fine. But the way he embedded some of those concerns was through a framework of the neutral rate being as restrictive or more restrictive than it was in 2010, aka it's probably time to cut. And B, tariffs being a one-time pricing increase, which means it's not that bad for inflation expectations. And then finally, the wording of may adjust our policy rankings, or may warrant adjusting our policy stance. That to me is very likely to signal, unless we get horrible data in September, a cut, which would not be the worst. Bitcoin 115. Yep, Bitcoin was at 110 2 days ago. Now you're up at 115. Puts are not doing that well this morning, and that's the point of a hedge. If you did hedge, you're kind of okay with the hedge going away. Someone did sell. Someone sold $27 million of puts on the S&P 500 yesterday at 640 strike. Now, selling a put is bullish, right? Because you're assuming the stock will go above it so that you won't have to buy the shares. But if the S&P ends at 645 like it's at right now towards the end of the day, yeah, that 27 million is going to do very well. So not too bad. Not too bad. Now, Trump right here did just tweet right after Powell's speech, and he said that he will fire the Fed governor, Lisa Cook, unless she steps down. This is the woman who is being accused of mortgage fraud. So you do have that argument from Trump, and we're going to see. Trump just tweeted, "Make America Great Again." And we'll have to see what happens with one of the Fed governors. Tom Lee's not live yet. He should be live in a little bit, but let's get a little bit of coverage on what Powell just said as well.
The last Jackson Hole for Fed Chair Jay Powell, and boy, was it a market mover. He delivered what the market wanted. Stocks are rising sharply. We have bonds rallying as well, lower yields and a weaker dollar, all in reaction to, I think, the money line where he said the shifting balance of risks may warrant adjusting our policy stance, tipping his hat toward potential pivot here to cutting rates in September. The odds, by the way, the swaps market, which was pricing in 65% chance that the Fed would cut in September before the speech, now at 100%. Let's bring in our panel to react to what we just heard. Steve Leisman, Paul McCulley, both still with us, along with our own senior markets commentator, Mike Santoli. Steve, I want to start with you out there in Jackson Hole. Your reaction.
Well, I have here what I've written down as 4 reasons why the Fed may cut and 1 reason why it may not. So it's 4-1 in that regard. It may cut because the current rate is moderately restrictive, because the labor market is unlikely to lead to high inflation. That's a pretty important point. He kind of has adopted Fed Governor Chris Waller's take on that. They're going to cut because the downside risks to employment have risen and because tariffs are likely a one-time price increase. I would say, reading that statement, maybe I'm missing one. The only caveat to all that is, obviously, he didn't mention this, but the data to come in the coming months, and that inflation expectations remain well anchored. So I think he's pointed us to a rate cut in September with just a few caveats relative to the data and inflation expectations.
Paul, you were right. I mean, you suggested before going into this that we would get a Fed chair that would hint at a September cut. I feel like that was the big takeaway.
Yes, it was. I thought overall it was a marvelous speech, kind of in the nature of a valedictory, his eighth speech. He did what he needed to do, which was signal that the time has come to take the next leg towards neutral, which I think is about 100 basis points below here. So
the other reason this is really important is because, as he just said, Powell signaled that the time is, there you go, S&P 645, high of day, folks, high of day on the S&P. Powell signaled it's time to move on. It's time to move on, right? Like, this was just like he did last year. It's almost exact, dude. If we get 50 bits in September, this will be an exact replica of 2024. But back in Jackson Hole, 2024, he signaled we haven't cut all year. It's time to move forward. This was right before the election. We ended up getting those 50 bips. And maybe that happens this time. But that lack of uncertainty turning into real certainty, Robin Hoodie, 109.18, that is why I think the street's excited. Palantir, 158, dude. Palantir was at 142 2 days ago. This one cracks 160. Not too bad. Still down from 190, but not bad, holding the high 150s. AMD right there trying to get to 170. SoFi, 2440. Open Door. I mean, Yeah, 21% bullish, 440. The rate cuts are definitely bullish for all the housing plays, and the volatility of Opendoor is massive. 170 million shares have been traded on Opendoor today, so that's getting some momentum. Zillow itself is up 5%. Zillow itself is up 5%. I'm just happy this happened before the meetup. It's always nice. I remember we had the February meetup in California, and that's when Palantir just hit 120 for the first time. It's always nice where, like, you know, the market cooperates before a meetup because everyone's generally just a little happier. You know, our portfolios are looking a little bit better. So I'm happy Powell gave the Miami meetup the dovish pivot. And so whoever shows up to the meetup, it'll be an even more fun time now. Dude, Rocket Lab's up 5%. This was not a head fake, folks. This was not a head fake. It seems like basically at 9:45, we saw a little bit of a pump across the board. Someone knew Powell was going to be dovish, and boy, was he dovish. 5.5% on the S&P. Shirley Temple's on me. All right, there you go. Dude, I can't drink too much at the meetup because I'm a lightweight. I take 2 shots, I'll be drunk. I want to be able to talk to anybody, so I got like, okay, I'm being hyperbolic. I can take like 4 or 5 shots before I get drunk. You give me 2 glasses of white wine, though. Give me 2 glasses of white wine. I mean, like, I know that I'm not doing myself any favors right here on the lightweight topic, but 2 glasses of white wine, I'm done. I am done. AMD up 4%. Yeah, let me look up the heat map. Heat map should be, oh, wow. This is a beautiful heat map. Look at this thing, folks. We've seen 3 days in a row of freaking Verizon and Caterpillar being red or being green and everything else being red. And today we get to see the most important companies on the planet actually go green. Even if they're not affected by rates, like Amazon, Microsoft, they're not that affected by rates, but just the general market sentiment with rate cuts is important. I'm blind from all the green. Yeah, again, rate cuts, when you do your discounted cash flow models and you decrease interest rates, the present value of future cash flows starts to go higher because the discount rate you use starts to go lower. And as a result of that, in general, you have asset classes that will benefit from it. And obviously, they have to have their earnings to continue to justify what the models will assume could inevitably be their valuation. But that expectation of discounted cash flows starting to come down is very important for the overall market, even if your stock is not affected by rate. Like Google's not really affected by rate cuts, but if the Fed's funds rate is 3% and Google's growing by 15%, you put a higher premium on Google's growth versus what you can get in a money market fund, which, by the way, I was not live yesterday. I'm looking at with you guys right now how much money came into money market funds. Here we go. Let me press enter. Okay, nothing burger, 3.7 billion. So still 7.2 trillion on the sidelines. This week was a nothing burger, 3.7 billion. It was an increase, not a decrease. A drop in the bucket compared to last week, which was 75 billion. But maybe some of that money stayed in the market because it was potentially expecting Powell to be dovish. And now I would expect money market fund assets to start decreasing because if people are expecting a rate cut, maybe some of that money needs to get into risk on assets over a safe yield on your capital. And so we are going to see, where is Nvidia right now? Nvidia 168 last week, 177, up 1.2%. Up 1.2%. Druckenmiller IWM calls, that is doing very well. Again, he loaded up on small caps. Small caps, wow, 3.4%. Almost tripled the S&P 500 gains today. S&P, are we at all-time highs yet? 645. We are trying to get there. All-time high is 647. We're $2 away. Let's see. Robinhood, 50 cents away from 110. Tessie, 337. Tom Lee was right, folks. Tom Lee was the only person saying the Fed was going to cut. Or Powell was going to be dovish. Everyone else in the mainstream media said the opposite. And so once again, Mr. Tom Lee was correct.
On the Federal Reserve of the Trump appointees and Trump supporters, in the sense of whether or not, with the question being, what happens to the local boards who pick these people? Would they support those kind of changes? But it's an important thing, and I'm not saying it's a bad thing, but it would.
Bitcoin 116. Tom Lee should be on CNBC in like 4 minutes, so we'll get him on and get his thoughts. Bitcoin right there. Wow. Dude, this was 113.4. I think 4 minutes before Powell spoke, 5 minutes before Powell spoke. I literally remember saying Bitcoin 113,400. Now we're at 116. Incredible. Absolutely incredible. The most hated V-shaped recovery. That is correct. The most hated V-shaped recovery. And so, again, the other thing that's interesting about this is I've been presenting some bearish arguments about like frothiness in the market, and like that stuff should be taken into account and should be understood. But all of that frothiness, Chamath SPAC, Kanye West meme coin, etc., I don't know if that's enough to, which is why I'm not selling. It's not enough to undermine earnings growth, AI, and a dovish Fed, aka more liquidity in the markets based on rate cuts. The earnings growth complements the dovish Fed. The dovish Fed complements the AI narrative, because now startups, their cost of capital goes down. And if they're an AI startup, they should be able to be even more efficient and effective. That helps overall economic activity, GDP growth. The one thing that can ruin everything is the labor market. And I don't have a conclusive answer on how the labor market is doing, and neither does Powell. But Powell did say the threat of the labor market being worse, Meta 750, is higher than expected, which means you got to cut rates. And so can he walk the fine line of not having the labor market deteriorate, but also have interest rates be restrictive and loose enough to allow a local pizzeria to say, hey, my cost of capital that I have to borrow to build a second location is cheap enough that I can hire the employees for that second location and not have to fire the employees at my first location because I can't pay back the debt on all the different goods and services I need to operate my pizza business. Like, that is the nuance that Powell is trying to navigate. And I think there's a world where he figures it out. I mean, he already has done pretty well going into the past 2.5 years, ever since we had inflation spike up. Can that continue? And if it does, I think the markets will reward equities if that happens. So we're going to see how this ends up playing out. Falling Knife, thank you for the $200 super chat. Maybe if everyone is bearish, then we survive by going the opposite. A finance content creator on X. Yeah, that is what I said 30 minutes before Powell spoke. Because someone asked Amit, like, what if he's super bearish or hawkish? I was like, well, if everyone is bearish, then maybe the opposite happens. And like, in markets that tends to happen. Everyone goes one way, you go the other way. And you don't think with the herd. And Tom Lee, again and again, has been proven to not think with the herd, have his own original opinions backed by data. And that has led to the gains that we have seen from his market calls. He should be on in just about 2 minutes, and then I'll switch over to him, and we'll see what he has to say. Falling Knife, thank you for the $200. That's very, very kind of you. Thank you for the $200 super chat, and thank you for being here. Robin right here, 109.56. That's trying to go to 110. Which would be very nice to see. Now, for Robinhood, when you have rate cuts, that's actually kind of bearish for them, right? Because they make money on net interest income. However, what's bullish for them is that more people start trading. So even though rates go down, as more people engage in capital markets, which is really where they make a lot of their money in terms of transaction volumes, that's bullish. And if Open Door's up 20% on a day like this, I bet a lot of people are buying calls right now on Open Door on Hoodie. Wow, Open Door 445. That's up 23%. Again, I'm not in this, but I'm impressed by the community that's growing. I don't really believe in the thesis, but if there's a community that's out there that's willing to market this thing and really get it to go higher, yeah, who am I to say this thing can't 10x? It could. We just got to see how the company takes advantage of this moment. SoFi right here as well. Wow, SoFi 2460. SoFi, I mean, this is the most bullish for SoFi with refinancing demand coming with rates going lower. So that's definitely something that would be exciting to see as well, as SoFi could benefit from that tailwind. Where's Duolingo? That one, that's up about 1.2%. Rocket Lab, again, that's up 5%. Let me bring up the stock draft challenge and see how we're doing. Stock draft, here we go. Matt's up 23, I'm up 13, Tanner's up 7, Steve's down 2, Chris is flat. So it's Matt, Amit, Tanner, Chris, and Steve. And that is the current rankings on that for the stock draft.
Inflation still tilted higher, he says, but signs of softening in the labor market. Joining us this morning at Post 9, Anastasia Amoroso, Partners Group Chief Investment Strategist for Private Wealth. It's great to have you back.
Good to see you.
Busy morning. So
yes.
Clearly the market was too nervous going in, right?
Yes, definitely. But we got a very strong nod to September, and that is obviously a huge relief. Look, I'm not entirely surprised because it seemed like in recent communication, some of the Fed was emphasizing labor market weakness. And the statement from Fed Chair Powell was so strong is that we're seeing more weakness. We're also expecting more weakness, and it can develop quickly. So you put all that together, and it seems like the balance of risk really has shifted from the focus on inflation to the focus on the labor market. So that is expected because look at the payrolls report. They're near stall speed. Look at who's creating jobs. There's not a whole lot of.
We got Hoodie 110. We got Hoodie 110. Dude, the market loves it. The market loves it. And again, the reason the market loves this so much is because, and I will say it again, I know I sound like a broken record, but the earnings growth in Q2 was phenomenal. So you just needed a cooperative Fed to balance the earnings growth with looser monetary policy, and you would get some momentum. And based on how dovish J. Powell went, there you go. You have your momentum. Pound here, 160, baby. 160. I wonder if Citron got rid of his short. But I mean, I don't know, dude. Trying to get this thing to 40. We're going to see if that ends up playing out. But 160, he did get rid of some of his tweets that he deleted. So wouldn't surprise me if he got rid of the short. But 160 right here on Palantir, that's up 2.5%. Palantir could still go down, right? Like Palantir's obviously expensive. But the point is shorting a company in this macro, now that we got the Fed pivot, and with their earnings growth, just on valuation, just doesn't seem like the smartest idea. S&P is $1 away, wow, from all-time highs. $1 away from all-time highs. 645.74. It's up $10 on the day. Nvidia is the only one that's kind of lagging here. Nvidia's up $2, but that headline around China is still kind of not allowing it to really move higher. SoFi right there. SoFi is about to hit 25. Let me check resistance. Let me hit resistance or check resistance on SoFi. Even Grab, bro, at 514 is getting a move off this. Let's see if SoFi can get there. Let's see. Everyone's portfolio's got to be having some love right now. This is why we invest, bro. We went through the pain to get these types of gains. SoFi, $25 resistance, 293,000 shares. 293,000. Not too crazy to see if we get there. Netflix is also kind of red. Tesla's also moving right here. Tesla, Tesla was at almost 340 or 338. Now it's at 336. Robinhood, maybe she wants 111. Google 203, Grab 515, Nvidia 177, ASTS. This one took a hit this week. This one's green, up 3%. I mean, I don't see the red. Where is the red? IBKR. That's wild that a brokerage is red, given like Powell's pivot is very bullish for a brokerage. So that's the market, I think, taking some of that money out and getting into more high beta. Reddit should be green. That's green. Where's UNH? UNH should probably still be up 2%. UNH is up 1.84. So UNH still holding on, 308. And then the S&P trying to go for all time. Yeah, this is my poor Costco today. Costco is not the exciting stock of the day. I'm still 10% off all-time highs. Yeah, I mean, if you were at all-time highs last week, you're probably not at all-time highs this week just because of how aggressive the drawdown was 3 days ago. But a decent amount of it is getting recovered. Let's do some year-to-dates. Put some year-to-dates in the chat. So my year-to-date on Friday was 107. Then 2 days ago, it was like 84. Now it's 99. 99.3. So it's like, yeah, we're not at 107 anymore, but we're not down at 84. And that's why we're seeing some of this momentum from the Fed.
Of industries at all.
Right. That said, we're going to get another payroll report. And if it doesn't suggest continued weakness, or if the inflation data before the next meeting is all
right, folks, here we go. The man who called it, Mr. Tom Lee.
Well, I think that it's the Fed acknowledging that the risks now are tilted for the labor market to be softening, and they want to head that off, especially because they don't think that tight labor markets are going to necessarily create inflation. That's a very good sign, and I think it means We have a dovish Fed again, and that's kind of a green light for small caps.
Small caps
for equities.
I mean, they are working. Last I looked, small caps were up 3%. So is this what we need to really confirm the sort of broadening that comes and goes in the market?
Yeah, because I think that one of the things we should watch for is what happens to mortgage rates. But mortgage spreads are right now 360 basis points higher than the 10-year. Historically, it's 1.6 percentage points. So you could see a huge drop in mortgage rates. That's going to help housing, helps the financial small caps. And I think already the ISM, which has been below 50 for almost 30 months now, could finally go back above 50, and that's a good sign for industrials.
Although we had a discussion right on the heels of the speech about a little steepening in the curve. Is there a sense that the vigilantes are at least present, if not being necessarily vocal?
Yeah, but we could also be steepening because growth expectations are improving as well. So this could be like what I'd call a bull steepening. I'm not really sure what the fixed income terms are, but I think it's actually a positive sign for growth.
The only real losers today are going to be some of the yielders and some staples. Would you be cautious on those?
That's right. I think that markets have been holding their breath. They've been getting defensive. That's why we've been bleeding for 5 days. And so now I think there's a relief and some capital gets put to work, and it's good for equities and risk assets.
So, all right, we need to make some news here, Tom. Everyone listens to you. We're at record highs now for the S&P and the Dow. How much more can these stocks rally?
I think there's a lot of upside, especially because, once you get an ISM back above 50, it really does argue for a broadening of markets. And I think one of the leaders probably comes from the financial sector. So I think, towards the end of the year, 6,800, 7,000 is possible.
Led by tech still?
Yeah, so I think you still want to play
this week.
Yeah, you want to be long AI and the crypto trade because those have been the market leaders. So the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
So you like them all?
Yeah, it's kind of cyclicals, AI and crypto, but not the defensives.
Your crypto calls have been getting a lot of attention lately, especially on Ether.
Yes.
Where we were talking earlier, we were debating whether it's the future of the financial system. A lot of people are thinking, people like you have said that.
Yeah, I mean, I think it's a really important moment happening this year with, the Genius Act, really greenlighting stable coins, and then Project Crypto, which is Wall Street moving on to the blockchain. I think it's a lot like 1971 when the US dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent.
But a lot of people just see it as wild speculation and froth.
I'd say anytime something goes up, people tend to call it froth. I think they called AI a frothy trade now, but we know it has a lot of legs, and it's been...
SoFi for the first time post earnings. We got to ring the bell for that one. 25. Congratulations to everyone in SoFi. Now let's see if she can go higher. 25.11 is what she has to break. She's 7 cents away. But SoFi, there you go. I know a lot of you guys are in SoFi Leaps. I'm in SoFi Leaps as well. I mean, wow. There you go. This is this one is the first one for me that is officially, as per this price action, a 10-bagger. Thank you, Anthony Noto, for my first 10-bagger, at least in the options world. And I know some of you guys, you're loaded up way heavier than I am in options, but there she is. SoFi, $25. Maybe this is the breakout moment for SoFi to head to 30. But there you go, 25 right here on SoFi on a dovish Fed.
Taking place for a couple of years. Keep in mind, Ethereum is also the place where when agentic AI comes together, when you have robots and you want proof of human, you want to make sure those commands come from, a verified source. That's all taking place on a smart contract. A lot of it will be Ethereum.
Tom, thank you. We just scratched the surface on that one, but we'll have you back very soon, no doubt. Tom Lee, a fun strat.
Dude, Tom Lee's wearing this green, you guys see this thing? This green handkerchief or whatever you call it inside of his in his suit. I like it, bro. I like it. He's going green. He's signifying that he is indeed a bull. When the rest of the world got bearish this week on Powell, he got bullish. Wow, hoodie 111. There you go. There's that green handkerchief right there. 111 on hoodie. The hood was 118 3 days ago, so I don't think it's crazy for it to get back there. And you got a backdrop from a macro perspective really helping. Robinhood right here going great. Oh, we got a Canada headline. Canada will remove its retaliatory tariffs on a long list of U.S. products that comply with existing North American trade, seeking to lower tensions with the White House, as per Bloomberg. Whoa. That's bullish. I mean, Canada capitulating. If they're getting rid of reciprocal tariffs on certain products that the U.S. wanted them to take off, I'm going to try to get some coverage on that headline right there. But yeah, it looks like that is true, being reported by Bloomberg. That is another piece of really bullish news outside of the Fed today. SoFi right there, just trying to get back to 24.94, which could help a trade deal. I also think this is what's going to happen with India. I don't think India is going to be like, hey, Russia and China are our best friends. I think India is going to be like, no, we shouldn't have 120% tariffs on alcohol from the United States. Let's get a deal with Trump. Again, Trump's trying to get a deal with these guys. Trump's not trying to, completely say they can't do any deal with Russia, but like he's trying to get something better than what we have right now. Looks like it's going to take some more time with India. With Canada, it's been taking, almost 7 months. But if this Bloomberg headline is accurate, that Canada is taking away reciprocal tariffs, I'm going to see if I can find the article on this. That is not bearish. And more trade deals, more potential peace deals geopolitically, that would also be awesome. Yeah, Canada's removing many of its reciprocal tariffs in an olive branch to President Trump per Bloomberg. This means a broad range of U.S. products will no longer face 25% tariffs. Dude, not bad. Not bad at all. I underestimated Trump, but damn, I was wrong. Dude is definitely getting some solid wins under his belt. Yeah, I mean, look, I think everyone to an extent was really annoyed with how the tariffs were rolled out. And like for good reason, right? Your portfolio goes down 30%. Like it's very hard to be like, oh, this is the greatest thing in the world. But at its core, the beautiful thing about retail is as annoyed as we were, as emotional as we were, the majority of retail did not sell. And I think the reason for that is because the majority of retail knew like the guy from The Apprentice was not going to tariff Zimbabwe by 75%. Like that just wasn't going to be how the story plays out. The institutions, they thought differently. And again, they had a mandate to protect their downside. They just were too late to get back in on the reversal. But retail bought the dip. And so you can't tell me the EU deal is not a win under his belt. Even if it doesn't fully get to the whole 750 billion, 600 billion, if it's even 120 billion, that's 120 billion more than what would happened over the past 4 years. And so if he can get a majority of those done with some of these other countries like South Korea, India, etc., it's not the worst thing. It's not the worst thing. S&P 500 right here, 645.95. That is green. Tom Lee tweeted at you back. Okay, what did Tom Lee say? I did tweet that Tom Lee was right about everything. He tweeted me some. There you go. I love Tom Lee. There you go. You got some hard eyes. There you go. Love you, Tom. Love you, Tom. I mean, dude, he's been right. He's been right. It's his win percentage is almost damn near 95%. Like he has not gotten a lot of things wrong over the past 3 years. And in 2022, 2023, it was hard to be bullish. And people say, oh, well, he's a permabull. It's like, well, dude, last time I checked, if you look at the S&P 500 from 1950 to now, it keeps going up. So it's like, yes, he's a permabull, but like he has reasons to be bullish. And when you have perma bears come out, like they can have reasons to be bearish, but that's just not a function of markets over time. And I think Tom Lee takes a long-term view, but he also looks at a lot of data at Fundstrat to come to their conclusions. Permabull is a good business to be in. I agree. Look, if you go bearish on a stock or the market, you better have a hell of a reason to go bearish. And when I mean bearish, I mean like either short or selling the entire position. Because you can not like a certain name and not want to buy it, right? But if you're bearish thinking it's like going to drop, or you're shorting it thinking it has to drop, or you're selling all your stock thinking that you're going to get in way lower, you have to have a real thesis. The stocks over time tend to go up. Palantir 161, up 3.3. And a lot of times the bears from a macro perspective, SoFi back to 25. And I'm not even saying this because I'm like, I hate the bears or anything. We like for the past 3 days, I was showing you guys every different type of bear case that's coming across my timeline and trying to present it to everybody else. I try to acknowledge the bears, but I also try to ask myself, how good of an argument is this? Like from a debate perspective, how good of an argument is this? Given I've done debate my whole life. And if the argument is, well, Zucks isn't hiring more AI people, so AI is fake, so the party's over. It's like, okay, so that's not, that just can't be the argument. SoFi, all-time highs, baby. 25.14. 25.14. She broke through 25.11. This is nice to see because all-time highs are not bearish. Nvidia 177, Pouncer 161, Hood trying to go for 112. And let me check resistance at 26 on SoFi. Because if she's breaking all-time highs, then maybe she wants to go higher. That was 393,000 shares that they broke through to get to 25. 26 resistance, 69,000 shares. Not as hard. Not as hard. Yeah, let's ring the bell again for SoFi. Oh, sorry, 52-week highs. You're right. All-time highs was 28. Yeah, I got too excited there. I forgot. But those all-time highs, bro, I know they're real, but they were like 2 days when it SPAC'd. So like realistically, yes, technically 28 is the all-time high, but it hasn't seen 25 in 4 years, and now you're starting to see some momentum above it. So we got $3, $3 to break above 28. Let's see if that can happen. BMNR, how's that doing? BMNR, that is up 11%. There you go, 54 on BMNR. Okay, so 28 is what you got to break on SoFi, which who knows? Maybe today. Probably not today. That's getting a little too bullish. But even a close over 25, I think would be very, very, very exciting. Not too bad. Shout out to Tanner, Mr. SoFi. Just like Tom Lee has stayed bullish on the market for the past 3 years, Mr. Tanner has stayed bullish on SoFi for the past 3 years. Shout out to Tanner. Pouncer right there, 162.40, Tesla 336, and then a hoodie, 111.81. Pouncer breaking one. Dude, Pouncer is trying to break 163. It's at 142 last week, or not last week, 3 days ago. 4% up on the day. Grab 517. That's green. AMD 168 as well. Dude, not bad. This is I'm just happy it's happening before the meetup, bro. I'm happy it's happening. The meetup was going to be fun anyway, but you know, in general, when you're down hundreds of thousands of dollars in a week, it's just it's nice to be up instead, or at least not be down that much. So this is going to be cool. Everything's pushing higher right now. By the way, guys, so remember when I told you like 3 months ago that there was a very, very famous person who messaged me on Twitter and that they bought Pouncer at 30 because of my tweets. And they were like, hey, Mitt, big fan of the content, bought Pouncer at 30 because of you. Would love to meet up sometime. Well, they live in Miami. And so I texted them 2 weeks ago and I was like, hey, I'll be in Miami for a weekend. And so if you want to get coffee, then we can meet up. And he texted a week ago. He's like, yes, let's do it. And I'll text you, to schedule a time. Well, he has not texted for the past week and a half. So in my opinion, given how high profile this guy is, I'm like, I'm not going to bug him. I'm not going to follow up. I'm like, let him do his thing, like who knows where this guy might be across the world traveling or something. So I'm not going to bug him. Yesterday, he hits me up. I did not expect to do it. I really was just like, this guy is too far up there. Like, I'm not, does he even remember that he wants to get coffee? He hit me up. And at 4 p.m. today, we're going to get coffee. And it will be revealed who he is if he lets me take a picture with him and post it on Twitter, which I think he will, because I think he's a chill guy. And I have the perfect caption for the picture because I'm a content creator. And I always think about the content. And I know this caption is going to be one of the best captions I could ever come up with. But I got to see if I can get his permission to post it. I will tell you who it is regardless, but I would really like it to be revealed with that caption on the photo. So we're going to see. Yeah, Tanner. Okay, Tanner does know who it is. Tanner does know who it is. I did tell Tanner. So it should be fun, bro. It should be really fun. It's not Drake. He's not even in Miami, bro. Drake's in freaking like Sweden right now. Derek said, "Yo, Derek, you want to come and talk about the markets and this and like how much you're up right now on your crypto and shit?" Derek said, "I'm trying to make you a millionaire." Dude, Derek's schedule as a startup founder is insane, bro. It's like 15-minute meeting here, 20-minute meeting here, 30-minute meeting here, hour-long stand-up, Figma, this, that, like, blah, blah, blah. Like, dude, I wanted to buy some Figma stock after he showed me how much Figma he used. This guy has like 80 pages of Figma documents for one feature, and then there's another 80 pages for another feature. I'm like, dude, is Figma this important? Goodness gracious. Yeah, it's a lifeline. So his schedule is very, very intense. But yeah, it was just cool. Yesterday was cool. Getting to meet Triple V, getting to see how he operates, getting to see Miami. Dude, I love Miami. I'm sorry. I love it. I love Toronto. I love Miami. I just like the vibe. I will say this. I've been to LA, like, I don't even want to count how many times. I've been to LA, I would say at least hundreds of times over the past 10 years for debate competitions, tournaments, all this. I've just been to LA a lot. The vibe in Miami is people have wealth and they're not flexing it. They're just, you just know they have wealth, right? Like you don't need to, they don't need to show you their Louis Vuitton bag. You kind of just know that person's wealthy. The vibe in LA is people are trying to show you their wealth. And that is the difference between LA and Miami. Miami has money from a tech perspective and from a Wall Street perspective, now that it's becoming a finance hub. LA just has like people that are trying to show you their Rolex and act like they're cool and that, you know, you should respect them when they walk down, what is called Melrose Ave or something, to seem like they're cool. Yeah, Melrose in Los Angeles. And like, and it's just a different vibe in Miami, bro. It just feels like a different vibe. So also the beach views are just unbelievable, but Miami's a vibe. I think Miami is a vibe. Yes. Okay. People do drive supercars. I'm not saying there's no flexing. I'm not saying there's no flex. There's definitely flexing. It just doesn't feel like LA where it's like everyone is trying to prove how cool they are. You know, Miami, it's like you have money and you might show some nice stuff off, but you're not like, it doesn't, the vibe doesn't feel like you're trying to do it. So I don't know. I just liked the vibe of walking around. Brickell is beautiful. Dude, the skyline in Brickell, absolutely gorgeous. Like, yeah, LA feels more superficial and fake. And a lot of that money is like Hollywood money, entertainment money, you know, influencer. At Miami's like a guy will own like 7 dealerships type of money, you know, and that's how he made his wealth. Not because he was in some movie with Tom Cruise. You know, so it's just a different vibe around it, but I really do like it. UNH right here, 307. Nebius, that's up 4%. CoreWeave, 95. Amazon, 227. I don't see what's red. Verizon's red. That makes sense. Risk off. Short QQQ, that's red by 5%. That was a good hedge the past couple of days. That's selling off. And Celsius is red. Everything else, Nubank, Intel, Palo Alto, CrowdStrike, Oscar, Hertz, Target, Lowe's, SoundHound's up 3%. Rick is up. Affirm is up. Viking Therapeutics, which had a bad week, that one's slightly up. And then the S&P just shy of all-time highs. It's pretty incredible. Pretty freaking incredible. It is not Jeff Bezos. No, it's not Jeff Bezos. I'm not important enough for Jeff Bezos. Jose, shout out to you being in the chat. We got some green, baby. We got some green. But it is, dude, the person is like, it's pretty like, I think I've told Steve, I've told Derek, I told Triple V, I told Tanner, and I told my mom and dad. However, and my sister. And okay. Did you guys, hold on. Let me see if you guys heard that. Let me see if you heard that. Did you hear what Derek just dropped a hint? Did you guys hear it? If not, I'll say it again. But it's someone who, like, I don't know, dude. Maybe they want something from me because I don't know why they're trying to like I don't know. Like it's hard for me to believe that they bought Palantir because of my tweets and they're super excited to meet me. I'm like, maybe there's something deeper. Maybe there's, I don't know. You guys didn't hear it? Okay. Let's see what hint we can give them. Your hint was a little too obvious, bro. Your hint, I feel like he's really tall. That's my hint. He's tall. There you go. He's tall. It's not Trump, bro. Trump's not in Miami. Well, he has Mar-a-Lago, but that's not really in Miami. Dude, I wish it was Michael Saylor. This guy, though, is more high profile than Michael Saylor. But it's not Michael Saylor. Even though we do have to meet him one day. Snapchat going green. That's up 2.84%. He is tall. I will say he's like 6'2" or something, 6'3". Yeah, he's Trump tall. He's Trump tall. Trump's like what, 6'2", 6'3"? It's not. I promise it's not a basketball player. Yes, it is finance related. Finance related, and he's as tall as Trump, if not a little taller. It's not Messi, bro. Messi's like shorter than me.
He lives right next door.
And he's in Miami. Yes, he lives in. I don't know if he lives in Miami, but he's big around Miami. It's not Barron Trump. Although that would be kind of cool to meet Trump's kid, but it's not Barron's Trump. The thing is, the important thing about this though is just like he actually wanted to meet, you know, because people say, like, yeah, let's meet up, let's get coffee, but it never ends up happening, you know, and like the fact that he actually responded yesterday, I thought was just like, all right, I guess he really wants to meet. So those are the hints. He is as tall as Trump, big in Miami, not a basketball player, and finance related. I think those are enough hints right there. It's not Mark Cuban. I promise. I think one of you guys got in the chat. I think I saw one person say it. But yeah, I did see one person say it. So it's in this chat. But it's not Cuban or Ken Griffin. Ken Griffin, I got to do a podcast with the one day. That'll be fun. Matthew, thank you for the $10 super chat. Is it Justin Timberlake because he did the movie In Time and the time is always currently right now? That's a good one. That is a good one. But it's not Justin Timberlake. It is not Justin Timberlake. Although Rock Your Body, I would say top 50 song all time. Top 50 song all time. Gustavo, thanks for the $5 super chat. Thanks for your coverage. Mandatory shots in Miami this weekend. I got a limit of like 3 shots, dude. I got to talk to like, dude, I think at this point it's legit 250 people because like at least 35 of you messaged me over the past 48 hours to get in. So I've got to talk to a lot of you guys, but it'll be a fun meetup. It'll be fun. It's not Peter Thiel, dude. Peter Thiel's like, that would be fun though. Because, you know, co-founder Palantir, that would be great to talk to him, but it's not PBD. I wouldn't hype up PBD, bro. PBD's cool. I like his podcast and stuff, but it's not PBD. He's also, I mean, he's successful in business, but this guy is a bit more successful when it comes to business. It is not a grinder date, even though you guys. Oh, Derek laughs every time you say this shit. So everyone just assumes it's some grinder thing. It's not Kevin O'Leary. Those are my hints. I gave my hints. I'm excited for it. It should be fun. I will let you guys know. It's not Grant Cardone. Although we were driving down Grant Cardone's house yesterday, which was pretty cool. But it's not Grant Cardone. Would people not in finance know? I think everyone should know him in the country. I guess that's another hint. I think everyone should know him in the United States of America. He should be well known enough. But finance people probably uniquely know him better. Robin right there, 110.90, Counter 162.50, and then Tesla 336.50.
This thing ties to the White House and Mar-a-Lago.
Dude, can you just come on the stream? Why don't you tell me? Just come on the stream.
I'm working.
Dude, just come on the stream. Someone did call you homeless again this morning. They're like, where's the homeless guy? It's not Tony Robbins, bro. Tony Robbins is like... Tony Robbins is not there. It's not Meet Kevin. No, it's not Meet Kevin. He's not... Derek's not shy. Dude, Derek is the most... Like, he is not shy at all. He will talk to a random person for 4 hours about anything. He just acts like he's shy. But this guy knows how to talk, bro. The amount of meetings I saw him in yesterday with like brand new people negotiating this and that, first time callers that he's like never talked to before. This guy can talk to anybody. But he is busy because he's doing a lot of stuff. Scott Bessent. That would be cool if it was Scott Bessent, but it's not Scott Bessent.
How do you have 80,000 people looking at it? You're Someone wrote it.
Jake Paul. It's not Jake Paul. It's not Jake Paul. Paul Atkins. Dude, if it was Paul Atkins, I think that there would be...
I like that.
that would like if I could talk to the SEC chair and get him to say what's going on with Robinhood's tokenization, that would be really fun. But that's not what's happening right now. Hold on. Let me see if there's a little bit more coverage right here on this Fed talk. Again, we saw from what Tom Lee had to say, broader market still pumping. Tesla 336, hoodie just down from 111 is SoFi at 25. SoFi still holding 25. But just below 25.25. Is he going bald? I don't think he's going bald. I would probably imagine not. Joe Rogan's in Texas, dude. He's not in Miami. Joe Rogan's in Texas. What time is Trump on? Okay, so Trump is supposed to go live, but guys, I don't think he's talking about the markets. It's some, well, no. So he's hinted it's a special announcement, but that might be about the whole DC police stuff. And so it might not be like, we got some coverage on Trump right here. Let me see what he's saying, but I don't know. I don't think it's like, it might not be about interest rates.
Well, David, a lot of folks are wondering exactly that. The president hinted that Ukraine might need to go on offense because these peace talks have been dragging on. Right now, the Pentagon still restricts strikes deep inside of Russia. And this is the post that's got everyone wondering. Quote, it is very hard, if not impossible, to win a war without attacking an invader's country. It's like a great team in sports that has a fantastic defense, but is not allowed to play offensive. There is no chance of winning. It is like that with Ukraine and Russia. Crooked and grossly incompetent Joe Biden would not let Ukraine fight back, only defend. How did that work out? Regardless, this is a war that would have never happened if I were president. Zero chance. Interesting times ahead. Russia's top diplomat, meantime, casting fresh doubts on this meeting between Russia.
Okay, so the Trump meeting at 12 might be more so about Ukraine and Russia, not about rates. Maybe he'll comment on rates, but I don't think it's a meeting just about rates. Now, if Jay Powell was hawkish, maybe the meeting would have turned into, hey, Powell needs to step down. But it seems like this might be more about Russia, Ukraine versus, and the DC stuff with the police force versus interest rates itself. So we could see that. Funstrat says, while 6481 was important as resistance from 813 to 815, this is going to be surpassed technically in my view and should lead to 655. Market breadth is hugely positive. And we did see some expansion of breadth this week. So Tom Lee now calling for 655 on the S&P as we break through these levels. David Abram, thank you for the $100 super chat. Bill Dulce, I don't know who this person is. No, it's not Bill Dulce. I can say that. I don't know if this is someone in finance. Thank you for the super chat, but this is not the person. And then Arvin, thank you for the $20 super chat as well. Appreciate you being here. It is not Barron Trump. I know how that could make sense, but it's not. It is not Barron Trump. Derek said someone got the name right in this chat. Yeah, I think I've seen like 2 people get the name right. So
You just gave variables for breaking it down, dumbass. 2.
That's true. That's true. It's not Tom Brady, bro. It's not Tom Brady. Tom Brady's a sports guy. He wouldn't want to meet with me. Either way, I think you guys will enjoy it. It'll be fun. Bitcoin, wow, 117. She's moving. She's moving. Wow. Ethereum, if that could crack 4,800 right here. Ethereum 4,650 at all-time highs, or not all-time highs, but intraday highs. Both of these really bullish for Robinhood and the crypto plays. Coinbase should be up probably 5%. Palantir's 162, Coinbase 321. Coinbase up 7% on the day. All right, there you go. I think that's it. Are we done? Are we all bulled up? Is that it? What's Derek's opinion on ETH? Derek, what do you think about ETH? He said he piled into it. He likes it. So he likes it. MicroStrategy, yeah, finally getting a bid based on Bitcoin. Bitmine? The Tom Lee thing, right? BMNR? ENA? What is that? Oh, that's a crypto. Okay, so he bought a derivative crypto coin of Ethereum. It's not a stock. ENA. If anyone wants to look that up, I'm not in this, but this is something that he's using to play Ethereum. Corey was up 7%. BMNR is up 14%. Strategy finally breaking above 350. That's up 6%. But for those that are in Ethereum through BMNR, not a bad day. And then Hoodie as well. Not too bad either. Yeah, ENA, that's the ticker that he's in. It's not Keith Raboy. It's not Keith Raboy. When do you meet him? At like, I don't know, later in the day. I think like 3, 4 o'clock. It is going to be kind of high security, bro. The location he told me to meet him at, it's a very private location. As soon as I told Derek where it is, he's like, oh, that's one of the most private places in Miami. I was like, okay. Might get patted down by bodyguards. I don't know. So we're going to see. We're going to see. Should be cool, though. It should be pretty cool. And look, it's just, again, it's exciting to see the Powell pivot right here when we all kind of knew eventually we would get those rate cuts. But it makes it more fun because the market, I don't want to say tanked, but it kind of tanked this week. So we're kind of just back to where we were last Friday, basically. S&P 646 right here. But the fact that we have to go through the pain of this week and seeing it reverse off something we all knew was going to happen, which is a rate cut, is not too bad. Yeah, Derek, we'll see some of you guys tomorrow as well. So it'll be fun. It'll be fun, dude. It will be fun. All right, I think that's it. Thank you all for being here. S&P 500, high of days, 1.6%. The entire market really getting some momentum. This is why we invest. We go through the bad days to get the good days. And we experience the good days in a humble way because eventually we know there will be bad days. And so it's the nature of investing. It's how it plays out. Ultimately, we are invested in some of the best companies in the world. Retail bought the dip this year. Retail has done very well. There are risks to this market in regards to froth, labor market inflation. All that stuff can't be denied. But what also can't be denied is that we are starting to see a loosening of monetary policy based on Powell's comments. And that is good for risk on assets. And as long as earnings in Q3 lives up to the hype, then I think we will continue to see some of that momentum, which is very exciting. Siege, thanks for the $20 super chat. Thank you, Amit. See you tomorrow. I will see all of you guys tomorrow. Yeah, this is the last stream before I see you guys. This is the last stream. We're not doing a stream tomorrow in the morning because it's Saturday. No market close today. But this is the last one before we have the meetup. I'm very excited for it. It should be fun. It should be good, dude. It should be a good time. It should be a good time. Okay, it's not JD Vance. This is the final hint I'm going to give. And it has to do with the White House. That's it. That's all. That's it. I'm done. That's it. He's tall. He's in finance. And it has to do with the White House. That's it. That's my hint. Some of you guys already guessed it in the chat. A lot of you guys probably already know it. But hopefully he lets me post the picture that I want to post with my caption. Because it's a fun caption. And it'll be a fun one. It'll be a fun one. It does. It's not Vance, but it has to do with the White House, which is why it's crazy, bro. Because my parents, dude, my mom texted me yesterday. She was like, "Did he respond to you yet?" And I'm like, "No," but that was before he finally responded. And so I haven't told them like he responded, and we're doing the meeting today, unless she's watching it right now. So I'm just gonna text her the picture when it's done, because she's just like, dude, my mom is an immigrant from India, who went to the Harvard of India, and then she came to America. Her degree was worthless because they didn't care that she went to the Harvard of India. She had to work at Walgreens as a cashier while raising 2 kids. My dad had a liquor store. And then when I told her in May, hey, this guy wants to meet with me, it's one of those things where she got emotional. She was like, are you really getting to the point where this guy wants to have a meeting with you? And I was like, well, that's what he said. And then 2 days ago, before I got the flight, she was like, so did he respond? Or are you going to meet with him? I was like, no, he hasn't responded. And I'm not going to hit him up because I'm like, I'm not going to bug the guy. Like he's a busy guy. So just even doing the meeting, I think, means so much to my parents because it just shows they came a long way to get to this country. And it's cool stuff. Also, my family has a history of White House. I told you guys, my sister met Obama back in 2010 because she was the second best public speaker in the country for a debate. So she actually got invited to the White House. She got to shake Obama's hand. Like that in and of itself was crazy for my mom back in 2010. And so this one is not as high profile as Obama, but still, it's pretty cool. So it should be fun. It should be fun. All right, that's it. Thank you, everybody. Appreciate it. Market close not happening today, but we will have it's Caroline Levitt. Dude, I would love to meet Caroline Levitt, but it's not Caroline Levitt. It would be pretty cool to meet up. We will have the meetup tomorrow. It should be fun. I think, again, we have like 10 spots left. If you're in Miami or you're local or you want to make it tomorrow, it'll be from 5 to 11. Just text me on Twitter. I will give you the details. And if you can make it, show up. If not, then I will have a lot of photos and we'll try to get all those pictures out there. And it should be fun. It should be fun. So, oh, trust me, me and my sister have debated so many times, dude. Like so many. My mom grew up with me and her just going back and forth because we're both like debaters, but it's cool. My sister, ironically, was the one freaking out the most about it. Like, she was like, he really wants to meet you? I'm like, yeah. She's like, this is not real. I'm like, well, that's it. She's like, it's a fake account. I'm like, he has the blue check mark. He has a couple 100,000 followers. I think it's the real one. Oh, I'll give one more hint. Okay, before I leave, one more hint. He published the book and he sent me a copy of his book. I told you guys this like 2 months ago, but he sent me a copy of his book. So he's associated with the White House. He's tall. He's in finance. He has a book and he sent me a copy of his book. I feel like everyone should know who it is by now, but I don't want to say it. And so hopefully tonight I'll be able to post the picture and you guys will see it. All right, that's it. Thank you, everybody. Love you all. We are bulled up. J. Powell did the pivot right before the Miami meetup. So thank you to Mr. Powell. And this is why we invest, to have days like this. So that's it. I will see you all tomorrow at the meetup. A lot of pictures will be there. So anyone who doesn't get to be at the meetup, you will hopefully get to live through it with these pictures and some videos. And more meetups will happen in the future. And hopefully I can meet everybody and this community can keep growing and we can keep doing what we're doing. It's a very special community on YouTube. It's not easy to get this type of a community. I've worked really hard over the past couple of years to make sure the integrity of this community stayed as intact as it has. And it's one of the reasons I met people like Derek and Triple V, right? You were some bullshit grifting YouTuber selling some course that, they don't really want to be associated with people like that. So I think just the honesty and authenticity of this channel that I am so unbelievably humbled for, that people actually visit it every single day, twice a day to get their news and their content. It truly means the world. So these wins, meeting with these big people, having these big events, to me, it's a community win because it's all of us doing this together. And just very, very, very blessed to be in the position where all of you guys get to enjoy it along the ride with me. So, and we all get to get rich together. We all get to get rich together. That's it. I'm out. Love everybody. I'll see you guys tomorrow at the Miami meetup. Bye, everybody. See you guys in the next one.